Good evening, everybody, and welcome to this meeting of the Performance, Assets and Strategy Overview and Scrutiny Committee at Cambridge City Council on Tuesday, the 27th of January 2026. I'd like to welcome members of the committee, of the Cabinet, the Services, Climate and Communities Overview and Scrutiny Committee Chair and Vice Chair, opposition group leaders, and other members of the Council who are present. For the sake of any members of the public watching, this is a meeting of the Performance, Assets and Strategy Committee, to which we have invited additional members, but voting members are only those on the Performance, Assets and Scrutiny Committee. Could I quickly ask members of the PAS Committee just to introduce themselves? I'll start with myself. I'm Councillor Katie Porrer and I chair this committee.
Jenny Gawthrope-Wood, Vice Chair and King's Edward City Councillor.
Councillor Tim Griffin, Coleridge Ward.
Councillor Jamie Dio, West Chesterton.
Councillor Mike Davey, Petersfield.
Councillor Hugh Clough, Newnham Ward.
Councillor Dinah Pounds from Romsey, and I'm Mayor of Cambridge.
Richard Arbery.
Thank you very much, members. We have other members with us, and I would ask them if they speak to introduce themselves at the time. And we're also joined by Councillor Karen Young, who is the chair of the other scrutiny committee. We also have some ward councillors in attendance, Councillor Richard Robertson and Councillor Mark Ashton. We have Councillor Bick, who's leader of the opposition group, and Councillor Bennett, who's leader of the Green opposition group online. I have not received any apologies for absence, and I haven't had any from members, so there are no apologies. Can I just ask if members have any declarations of interest? Oh, Councillor Davey?
I think about it. I'm a director at Cambridge United Football Club, and they have received funds from the City Council in the past.
Thank you very much. And just remind members that if you do realise there's a declaration at any point during the debate, you can declare at any time. Please just put your hand up and let me know. So, the minutes of the previous meeting on the 9th of December are attached. I'll be grateful if members could indicate if they are happy with those, and then we'll move to any matters arising. I'm assuming that, people are confirming for those watching online that those are acceptable. Does anyone have any matters arising? I understand Councillor Pounds has something. Go ahead, Councillor Pounds.
Thank you very much, Chair. So I just wanted to update you all on the proposed closure to the present Waterbeach station, which we talked about at the last meeting. And I should just mention that I do have an interest in that. I have a close family member who lives in Waterbeach, but they are not affected by this personally. They actually live nearer to the new station than the old. So last meeting we discussed the fact that the present station was going to be closed, and we were told by the planning officer that this was decided, and it was in the literature from the GCP, even though we know that it will inconvenience a lot of residents, increase traffic through the village, who will be driving to the new station. Now, Councillor Holloway very kindly followed up with me with the GCP, and that was not the case. So there is now going to be a public consultation with residents on the option of mothballing or retaining the present station. And I note that residents have already formed a campaign group to keep their station. And the reason that I was concerned about this is because we heard from the Development Corporation in the last scrutiny meeting how concerned they were that villages should not be adversely affected by the Cambridge expansion. And this was just a complete contradiction of what was being said, the idea that we would close people's station when they didn't want it. So I do... the development and growth of Greater Cambridge, I do think that it's important that we carry our present residents with us. Thank you very much, Chair.
Thank you, Councillor Pound. And that's noted. Obviously, we don't have any planning officers present here tonight, but obviously it sounds like you've already passed that back to them. And obviously, if there is a consultation, that's open to any resident. But this, at the moment, is obviously affecting South Cambridge rather than the city in that sense. Thank you very much. As members will note, we have a very short agenda this evening, but it's likely to be quite a long item, I feel. So I hope, as circulated via email, you'll see how I've divided it up, and that's going to be displayed on the screen shortly so the public can see as well. I would urge members, if at all possible, to keep questions short and to the point, and I'd be really grateful if officers and cabinet members could do the same in any responses, because we are really pushing it for time with this quite sizable budget item. So we're going to lead off with Jodie Etherington, who is our Chief Financial Officer, and he will do a very brief introduction to the budget in the whole, and we'll start with the housing revenue account budget. And that's, oh, beg pardon. Oh, the minutes. Yeah, I think we've agreed the minutes, but I will sign those separately after the meeting, if that's okay with Dan. Yeah, fantastic. I should also introduce Dan Kelly, who is our Democratic Services Manager, who's with us, as well as Jane Wilson and Jodie Etherington, who I've already mentioned, and Sarah, who is producing the meeting for us tonight. Thank you very much. So, if I can, I would hope we would spend a maximum of 1 hour, 15 minutes on the housing revenue account item. So I will ask Jodie to give us a short presentation. Thank you, Jodie.
Thank you, Chair. Good evening, everybody. And thank you for giving me the opportunity to present the budget setting report to the committee tonight. Just a bit of background, first of all. So this will be our first combined budget setting report that brings together both the General Fund and the HRA into one single report. We're also combining many of the other strategies that we produced during the year: medium-term financial strategy, the HRA 30-year business plan, the capital strategy, and the treasury management strategy. So for the first time, this will give members of this committee and eventually full council the opportunity to see a holistic view of the council's financial plans in one place. And I think that's a huge step forward from the fragmented reports that we had previously. I'm just going to say something before I get onto the HRA as well about the impact of local government reorganisation and how that comes to bear on the budget setting process. As you will be aware, the current LGR timetable as set out by the government will see this council dissolved on the 1st of April 2028. However, there has been no firm decision yet on what that looks like. There is no legislation in place. So from a statutory perspective, we are still required to set our budget for the next year and for the medium term on a going concern basis, on the assumption that the current council services will continue until a government decision is made to the contrary. So whilst the government has announced its intention that this council will dissolve at the end of the 27-28 financial year, in practical terms, we need to continue to set a balanced budget over the medium term and to continue to meet our statutory responsibilities. So moving on to the housing revenue account, just a bit of context about the HRA specifically, and some of you may have heard me present the Q2 outturn report to Cabinet just before Christmas. The significant recurring operating overspends in the HRA for the last couple of years. So we had an overspend of 2.3 million in 24-25, and we're currently forecasting an overspend of 3.1 million for the current year. And that's really reflective of some significant sector-wide revenue pressures within the housing sector, increased regulatory requirements, a huge focus recently on building safety and damp condensation and mould, and we're seeing that come forward in increasing revenue costs within the HRA. As you're aware, the council also has an ambitious capital programme. Last year's BSR set out an intention to spend £709 million in the HRA over the next 10 years on delivering new homes, on energy efficiency and retrofit of existing stock, and also on the council undertaking significant borrowing in order to finance some of that expenditure. So in that context, this year we felt it was really important to have a proper look at the HRA budget, to do a complete reset of the HRA budget and the 30-year business plan. So to that end, we have engaged external consultants, Savills, to come in and help us to look at all of the HRA revenue and capital budgets and our 30-year plans. And that's led to quite a significant movement in the budget position that's proposed for 26-27. So what's resulted from that work is proposals, budget bids that propose ongoing new revenue spend in the HRA of £2.2 million per year. And those are set out in detail at Appendix H to the budget setting report. The bulk of that spend will be on housing repairs and dealing with damp condensation and mould, with a little bit also on housing management and some ICT improvements that should eventually help with some efficiency savings, but also provide a better service for tenants in terms of how they get in touch with us and how we manage those tenancies. That will mainly be funded through rent convergence, and I'll come on to talk a bit about that shortly when we talk about rent setting. But the additional income that rent convergence could generate for the council will essentially pay for that ongoing investment. Importantly as well, through the work that Savills have delivered, we've been able to refresh the 30-year business plan and confirm that the council's current planned 10-year new homes programme is affordable within current parameters. So coming on to rent setting, we are expecting a new rent standard for 2026 to be issued by the regulator of social housing. The government has indicated its intention that rent increases will be capped at CPI plus 1% for the next 10 years. The rent standard is likely to cover 5 years, with a stated intention that there will be a further 5 years at the end, but clearly that will be subject to future government decisions. It's based on CPI at September, the previous September, so the September CPI figure was 3.8%. So we are proposing a core increase in our HRA rents of 4.8% for 26-27. We are also proposing that garage rents increase by the same amount. Those are not regulated, so we are free to do what we want with those, but we have proposed a similar increase of 4.8% for the garage rents. And we are proposing, subject to a government decision, which is expected in January, and there's still 4 days of January left, we are planning to implement rent convergence for social rent tenants where applicable. So what this means essentially, when social rent properties are re-let, they are re-let by reference to a formula rent, which is calculated based on average national social rents, adjusted for average local earnings and property values. And that formula rent level is applied each time a property is re-let, subject to an additional 5% flexibility that this council applies. Where we have tenants that have been in their homes for a long time, many of them are paying less than that formula rent because of previous historic below inflation rent increases. So for example, in 2023, when inflation was at 10.1%, rather than increasing rents by 11.1%, which would have been the CPI plus 1, this council only increased the rents by 5%. So any tenants who have been in their homes for longer than 3 years at least are paying below formula rent at the moment. The problem with that is it leads ultimately to a structural underfunding of the HRA. The formula rent is supposedly set at a level that allows the council to maintain its housing stock and to invest in its housing. And while we have significant numbers of tenants paying below formula rent, obviously that makes that difficult. So the government have consulted on a plan of rent convergence, which will essentially work over a period of time to move people currently paying below formula rent back to paying the correct formula rent for their property, as calculated at social rent levels. What that will mean in practice, essentially, is any tenants who are paying less than formula rent will see an additional increase on top of the 4.8%, which will continue until essentially the correct rent level is reached. The government has consulted on additional increases of either £1 per week or £2 per week. Many councils have lobbied for £3 per week, but that's not something that the government have mentioned at all in any of their communications. So we've done all of our modelling at £2 a week. Clearly, we wait to see what the final government decision will be. But assuming rent convergence rate of £2 per week, the actual average rent increase for council tenants for 26-27 would be 6.1%. Taking all of that into account, the chart on the screen shows the HRA revenue surplus after interest payments as planned for the next 10 years. So you can see the initial dip in 26-27 is essentially due to some of the additional investment that we're putting in. It's also due to an increase in borrowing costs as a result of the new build housing developments that are taking place now, where we're undertaking borrowing to finance some of those investments. And you then see over the remainder of the 10 years that surplus start to increase again. And just to remind members, the HRA is a ring-fence fund, so any surplus that's generated in the HRA can only be reinvested into HRA housing within the city. So the way the HRA works is that revenue surplus that is generated, budgeted to be just over £8 million in 26-27, essentially the vast majority of that will be applied to finance capital expenditure within the HRA. So that's repairs of existing stock, retrofit and energy efficiency works, or new build housing. It can't be applied to other general council services. And I think that's really important in terms of the HRA operating model. Obviously, the more that's generated in terms of operating surplus, the more money is available to finance that capital expenditure, and the less the HRA has to go out and borrow, which obviously has a beneficial effect in the long run. In terms of capital spend, we are again looking at ambitious capital plans over the next 10 years. Investment in existing stock over the next 10 years of £279 million, new build development of £584 million, and other capital spend, which is mainly on administration and IT, of £4 million over the 10 years. So that's a total of £867 million. The capital plan at the moment is predicated on a successful bid for a strategic partnership with Homes England to help us to finance the 10-year New Homes programme. And that bid's going to be going in over the next couple of months, and we would hope to hear by the summer whether we've been successful in that. If we're not successful in that bid, then there are other alternative funding arrangements with Homes England, but we will be back to bidding on a scheme-by-scheme basis. That would give us much less certainty over the programme. But obviously we're really hopeful that we'll be successful. In terms of how that capital spend is financed, that's all set out in section 7 of the budget setting report. It will be a combination of capital grants, hopefully from Homes England, capital receipts from the sale of council homes, and the revenue surpluses that I mentioned earlier. But that won't cover it all, so there will be a need to undertake significant borrowing within the HRA to finance that programme. And we are looking at £478 million of borrowing over the next 10 years. Now, clearly that's a significant sum, so it's very important that members are fully informed and cognizant around the risks there and the inherent risk. And we've worked very closely with Savills on this using their HRA modelling tools. And essentially we measure the financial resilience of the HRA over the long term using what's called the interest cover ratio. So this is basically our ability to meet interest costs from the operating surplus within the HRA. And essentially an interest cover ratio of more than 1 means that you have sufficient revenue surplus to cover your interest costs. But it wouldn't be prudent to set a target at 1, because then clearly if any of your assumptions aren't quite right, then you run into trouble very quickly. So Savills have advised that we set our target interest cover ratio at 1.25% to allow for some prudent headroom. And using that target, the current programme, using the assumptions that we've got in there, is affordable. And that's set out again at section 7 of the report. And it's also illustrated by this chart here. So the black line on this chart shows the provisional debt capacity as calculated by Savills using the interest cover ratio of 1.25%. And the red line shows our projected borrowing over the life of the 30-year business plan. So it does sit pretty close while the new homes are being built. I think the scale on the graph there doesn't quite help. There is still some headroom. So the lowest the interest cover ratio gets is 1.29. And that allows headroom of about £22 million of borrowing. So at the narrowest gap, I guess, our actual borrowing is projected to be £22 million less than the headroom. And then obviously once that current 10-year programme finishes, potentially that gap then widens again as the revenue streams from the HRA continue to increase. That's everything I've got on HRA. Thank you, Chair. Happy to answer any questions.
Thank you very much, Jodie. That's very helpful. So we move to questions on the housing revenue account. Yeah, if people could indicate, we'll take questions from the PAS committee members first, and then Councillor Young, Councillor Gardner-Smith. Okay, Councillor Griffin. I think then we had Councillor Shield. Okay, go ahead, Councillor Griffin. Oh, Councillor Pounds.
Thank you very much. And I first of all like to say that I think this unified approach to the budget document is really helpful, to have everything in one place. So that's a really great thing. Well, my question is about the average increase on convergence, 6.1%. So that's their average. So what is sort of the maximum? And I guess I'm asking for the standard deviation or something, right? What's I mean, one could imagine, you know, some residents might be way off, and they, you know, their increase might be something like 10%. And so, what do we do in situations like that? How do we make it easier for the tenants to catch up?
Thank you. I mean, obviously, the calculation will be carried out property by property, and with convergence, it is a fixed amount of say, £2 a week or whatever the decision is. It's a fixed amount per property. It's not a percentage amount. So clearly, if your rent is lower to start with, then as a percentage, that £2 is going to be higher. There is a table on page 100 of the agenda pack that breaks it down by property type, so it gives averages for each type of property. So for a one-bedroom property, for example, the average increase will be 6.2%. It then decreases by size to a six-bedroom property where the average is 5.7%. But clearly, there may be outliers within that. But I guess the cap is £2 on top of the 4.8%, no matter what your starting position is.
Thank you. Thank you.
Thank you very much. Councillor Shield.
Thank you, Chair, and thank you, Jodie. 16%, who is getting the 16% increase again? Or have I not heard correctly?
No, there's not 60, 6.1% is the average. No, nobody will get 16% increase in rent. No, the rent would have to be very, very low to start with.
I think I'm a cloth ears today. I hadn't seen that number anywhere in the report. Thank you.
Thank you, Councillor Shield. Councillor Pounds.
Thank you, Chair. Thank you, Jodie. That was really, really clear. I just wondered if the government has given you any indication at all about ending the right to buy of council properties at all.
There were significant changes to the right to buy scheme towards the back end of 2024, as you may be aware. So the discounts were reduced significantly. So the maximum discount in Cambridge, I believe, is now £34,000, down from over £100,000. And they've also made some changes to the eligibility criteria. So our sense and our modelling is that the number of properties we lose to right to buy will decrease in the future, and we're modelling 15 sales per year after the current year. So there will be a spike in the current year. What happened when they changed the rules is clearly there was a spike in applications just before the rules changed, and as with any property sales, some of these take longer to go through, so we are still dealing with some of those applications. So we will see a higher than usual number of sales in the current financial year, but we are anticipating from next year that they will decrease. The other thing the government has done is it has significantly loosened restrictions about how we use the receipts from right to buy sales. So we're now permitted to keep 100% of the money that's raised rather than having to give some back to Treasury. And the restrictions around how we use that to buy replacement stock or for new build have been significantly reduced. So it used to be the case, for example, you couldn't combine right to buy receipts with grant from Homes England, but with effect from 1st of April, we'll be able to combine the various sources in the best way for the council.
Thank you very much. That certainly sounds like a very welcome change. Councillor Gorthrope-Wood.
Thank you. So this is actually about the rent increases and convergence and how the formula rent is applied. And actually, I would love to see somewhere actually a detail of what the formula, how the formula rent is put together. And when we know it's roughly, was it 40% of the market rent, but that's not exactly what it is. But I note on, and this is on page 101, that with rent convergence, right, we're possibly going to implement this at £2 a week. And then the rent standard allows councils to charge social rents at 5% above the formula rent, 10% for supported housing, and that flexibility is only applied currently at reletting. So you say it's unclear how that's going to interact with convergence, and I wonder if you could explain that a bit more, please.
Sure. So having spoken to Savills and others within the sector, I think the consultation that the government went out with on convergence isn't particularly clear, and I think could be read one of two ways in this regard. So it's unclear to us at present whether, as you say, all of our relets at the moment take place effectively at 105% of formula rent, because we have applied the additional 5% flexibility, or 110% for supported housing. What we don't yet know is, should the government decide to go ahead with convergence, will convergence take people to formula rent, or will it take people to formula rent plus 5%? And we don't know until we get the response from the government consultation. So for the sake of the modelling that we've done, we have assumed that we are only going to 100%. We've erred on the side of caution in order to make sure that the modelling is affordable at that level. What I would say is that if that's the case, it doesn't necessarily entirely deal with the issue, because one of the other things that rent convergence seeks to do is to ensure fairness between tenants, and to ensure that tenants living in identical properties are paying the same rent, and you don't have somebody paying less than their neighbour purely because they moved in on a different date. And clearly, if we're limited to the 100%, then that still won't entirely be the case, but it will get us closer to it.
Thank you. Thank you very much. Councillor Dial and Councillor Clough afterwards. Thank you.
Thank you. So I guess a couple of questions to start. Just noting on page 75 of the pack, 53 of the report, our assumptions on bad debt and that dropping. But noting that in the section above that, it does also show that there's been a steady rise in tenant arrears, which to me would potentially indicate that actually we've got more of a bad debt risk sort of increasing. I just wondered, is there any assurance that we can sort of take additionally from what's in the report in that regard? And then thinking a bit more about the capital elements, going to page 57 in fact, page 35 of the report, we've made a comment around sort of housing demand currently, and I think the housing demand is primarily for single bed and, well, primarily for single bedroom properties actually, but then what we're actually looking at delivering seems to be a lot less in that regard. I just wondered, is there any logic to how we try and address that shortage of single bedroom properties, or have I missed an element of the overall strategy?
And would you like to refer that to one of the officers online? I think we have Samantha and Sam and Ben available. I don't know if one of those would like to take it, or... I can't see if anyone's got their hand up. Oh, Ben, are you able to take that question, which I think, well, let us know if you need to clarify.
Yeah, I can take forward the question in terms of what we're doing with the new build. In terms of the waiting list, I think my colleague Sam will be better placed to answer that question. In terms of the new build, we are guided by the housing register, and we monitor that very closely. But we effectively, the last time we looked at it in any detail, it was more or less a U-shaped type demand. And you are right to point the high level of demand for one beds, but also then it goes down and increases again at around the 3-bed mark. And that we try and balance that new build strategy based on that waiting list. Of course, it changes over time, so we do refer back to our housing colleagues just to make sure we are building what the demand is for out there.
Thank you, Ben. I don't know if Samantha or Sam wanted to add anything to that. I think it's just the question between what we're aiming to build versus what the table about demand for the one beds is showing.
Yes, so as Ben says, they do address, developments based on the demand on the waiting list. I'm happy to pick up in relation to the arrears and the bad debt side of things. So we are aware that our arrears have been increasing. We have had challenges with our enforcement due to the rent regulation project that is going on and that refund process. So that will improve our arrears position at some point and allow us to pick back up with the enforcement. And the knock-on is also the bad debt. So normally you would expect to write off a level of bad debt within each year. We haven't done that just because we know that potentially that could lead to credits on accounts that we've already written debts off. So that whilst that project is still ongoing, it does mean that we are holding a slightly higher level of arrears than we would expect, and also that bad debt provision as well.
Thank you very much, Samantha. And can I remind members as well, if there's anything you want to recommend to Cabinet, for example, we want them to review some of these figures, please do flag that up, because the point of this meeting is to get Cabinet to a position where hopefully they've got the best information. So I don't know if that's something Councillor Dyer wants to consider, and same for any other points you make, please do let me know if there's any actions you would like me to take forward. I think Councillor Clough was next.
Yes, I'm just listening to the last comments. I don't think I fully understood what was the process that was held up at the moment. So I think what you're saying is you were allowing your arrears to build up because you then don't want to write off an arrear and then not be able to collect it. Is that the situation? What was the other process? I've got other questions, but I think...
Thank you, Councillor Clough. Samantha, are you able to pick that up? I believe it relates to the rent refunds we're dealing with at the moment.
Yes, so nearly just over 2 years ago, we picked up that we had overcharged tenants on service charges and in relation to some of our affordable rents, and we put all of those right the following April. So everybody is being charged the correct amount of rent and service charge, but what it did lead to is a big project then to calculate what we had overcharged in order to enable refunds. So as I say, whilst we've got this project ongoing, it has just meant that we aren't able to take all of the enforcement action that we would usually take on arrears cases because we don't have accurate balances at the moment. And additionally, we're not writing off any of those debts on accounts that we can't recover those debts from.
Thank you. Councillor Clough, I think you said you had another question as well. Go ahead.
Yes, so of course that immediately raises the question as to how big and how much. So I presume that's in the paper somewhere. Okay, fine. So I also had another question, if I could. Yeah. So just so I fully understand, what you're saying is that in terms of rent conversions, and I think it's at the moment you don't have the go-ahead to do that. The government hasn't said it. Can you remind me again when the government will let us know? Because obviously what I think you're saying also is that the budget and the plan is based on getting approval to do rent convergence. Is that correct?
Thank you, Councillor Clough. Yes, I think we probably all share the concerns that this was meant to come out in time for this scrutiny committee, and we're running very tight as and when it does come out to actually get this out to tenants. But Samantha, do you want to add anything?
I mean, yeah, unfortunately, we are at the whim of central government announcements. We've modelled it in, and I think unless we get an announcement probably this week, it's unlikely that it will be in time for us to actually physically put it in place for our year-end processes, because they're actually already, at quite a late stage.
So is that one of the big flags that we need to send up? Because at the moment it sounds as if the government dithers. I don't quite understand what you mean by year-end processes, but that may be to do with the year-end is when you tell the tenant what their rent will be. So if you're going to miss that deadline, you're a year out of the conversion. Now, reading it, it looks like that means for every property you're going to that's on a social rent, you're going to be missing £104 for this next year. Is that correct? So what would be the impact on the budget if we are not able to do that and hit the year-end target? Thank you.
I might hand that to Jodie, who kindly circulated a paper, which I think came from Samantha, which did just give us because obviously the government could go for £2, they could go for £1, they could go for nothing. I think, Jodie, would you mind just picking that up and letting us know the implications if we do have to drop from 2 to 1 or to 0?
Sure. So we've done some sensitivity modelling as part of the budget setting report, and that is set out in one of the appendices in terms of the work that Savills did. Apologies. Appendix J includes the sensitivity analysis that Savills have done, which sets out the impact of some of the other various assumptions in terms of housing revenue account sensitivity. So if you look, for example, at rent convergence, they've said over the 30 years life of the plan, should we get £1 per week instead of £2 per week, the total borrowing would increase by £39 million over the 30 years. Should there be a 1-year delay to rent convergence, which is probably the situation we're looking at if we don't get a decision this week, that would increase borrowing by £17 million in total. No convergence at all would increase borrowing by £131 million. And actually, the scenario where there's no convergence at all would see us breach our interest cover ratio target of 1.25. So that would require us to go back and re-look at the capital programme and will potentially have a knock-on impact on the extent or the speed of the new homes programme if we didn't get any convergence at all. I think what's much more likely, based on previous government announcements, is either it comes in at a lower rate or slightly later, if not this week.
Okay, so at the moment, what you're saying is possibly it's going to come in at 1, but you've got it in this budget at 2.
The government has consulted on options at either £1 or £2. We have modelled 2. Obviously, we're waiting for the decision.
Unfortunately, it was too early for this scrutiny committee. We were hoping we'd have it by now, but obviously the problem is we hope it will come forward at least in time for Cabinet, because otherwise it's going to be... There is a risk there. I think that I'm guessing everyone in this committee would share the concerns that, you know, if this gets delayed by a year, that potentially has a huge impact in terms of the borrowing that we need to take on.
I think just from a practical perspective, if the government hasn't made a decision by the date of the Cabinet meeting, it would then be too late for us to implement, because obviously we need time to calculate everybody's rent and to get all the rent letters out to tenants to give them sufficient notice of their rent increase. So, and that work is happening this week. So we're holding off to see if we get an announcement this week, but obviously what we don't want to be doing is delaying that information going out to tenants.
So it's not possible to run 3 sets of rent letters and decide which ones go in the post? Okay, thank you.
Thank you. Unfortunately, we can't recommend to government to this committee. We can only recommend to Cabinet, but I'm sure Cabinet will pass it on. Does anyone else have any more questions? I know Councillor Gorth, Councillor Dale, I have some, but I will wait my turn. Councillor Clough. Okay, Councillor Gorth-Wood.
Okay, thank you. So, relating to what Councillor Dale was saying, on the rent arrears and debt, I wondered if perhaps Sam had some comments on the transition to universal credit and how that could affect things. And I note that new software systems are, should be coming in that will facilitate the arrears management and debt management. So just some comments on that. And also about, the repairs bill. And again, this repairs reserve. I know we've been looking to be more strategic about this, and there have been a lot of statutory changes, plus inflation, plus the backlog. So I'm glad that this has been highlighted here. But there is always this worry if there are further legislative changes. I mean, this is a risk, I know. So I'm really asking if you've got any comments on that. I don't know whether this is important or not, whether the contractor pipeline and costs could, whether now we have a contractor pipeline, whether this is going to alleviate sudden increases in costs. Will we be expected by any unexpected depreciation of the of our assets, housing assets? So it's just some I'd like a bit of more comment on that, please. Oh, and one other thing, on the table which shows housing need, one of the things that I would like to see is, when you've got people on the housing register who are applying for a 1-bedroom flat, that's probably one applicant or two applicants, or 2 people, 1 or 2 people. But one of the things that you have to multiply it by the number of people who are likely to be housed. A 3-bedroom house, you could have between 3 and 6 people being housed. And I think that needs to sometimes be drawn out. Thank you.
Thank you. Samantha, are you happy to take that?
Happy to take the arrears perspective. So yes, there is some a budget bid in there for some software, a couple of pieces of software linked to our arrears management. One is a little piece of software that automates a lot of the universal credit process that we currently have to do. We have to verify every single rent whenever somebody makes an application, but also when we increase the rent, we have to redo those. So there's huge amounts of work that go on in just after that rent increase period to verify all of those no rents. So that would just take away the vast majority of that. It would all be automated. And then the second is in relation to sort of helping us with our arrears management. It's just a much better tool than we have now. It uses sort of predictive analytics and a lot of, again, automation of things like text messaging and all of that, just to make us much more efficient so that we have more officer time to deal with those more complex cases, the ones that require additional support. It may be that they're migrating over to universal credit. So just coming on to that point as well, the vast majority of residents have mostly migrated over to universal credit. Those that remain are the ones that sort of haven't had any sort of change of circumstances since universal credit was introduced that would have meant that they migrated over already. So they are some of our more vulnerable customers, tenants that are now sort of in that process over the next few years with the DWP. So they will take additional resource. So the software should help us have that ability to support those residents over onto universal credit.
Thank you very much. Councillor Dale?
Yes, thank you, Chair. And I think actually this probably links back to Councillor Gawthorpe-Wood's question. I think the some of those improvements you've mentioned and they're listed in Appendix H link through to a savings on city services with quite substantial efficiencies that are then generated from the investment. What's not clear to me from the description is kind of exactly what those savings are expected to sort of look like. So are we expecting a reduction in staff in that area, or is it a reduction in contractors? I just wonder if it generally seems to talk about sort of improvements on things without really explaining how that's going to then generate a financial saving for the for the council going forward. Thank you.
Thank you very much. I'm guessing that's probably Samantha for that one, if that's okay, Samantha, unless Jodie wants to say anything.
I think it's probably more for the city services side. I'm not sure we've actually really got anybody online. I mean, I can answer to some extent, and then I don't know whether Samantha's got anything to add, or potentially Sam. I think that it's still a little bit uncertain at the moment exactly where those efficiencies will come from. I think some of it will be reduced contractor costs from reduced call-offs and possibly from better contract management. And I also think there are opportunities for some efficiencies in the in-house service as well. But essentially, I think through better data management and being more on top of the data and the repairs and what needs to be done when, the intention is to manage that process better. I think as we go through the contract pipeline process that we're working through currently, that will firm up in a bit more detail. I think, we recognise we've been reasonably prudent in terms of the level of those efficiencies, certainly in the longer term. I think recognising the uncertainty at the moment. So that's kind of the baseline minimum. Obviously, if we see opportunities to go further, then we will.
Thank you very much. Councillor Clough?
Yeah, I just wanted to check my understanding of the interest rate fluctuation risk. So I can see that in your assumptions, which are on page 118, it talks about the borrowing interest rate on the 25-year public works. I mean, are we borrowing on a long? So when we make a capital investment, and is each tranche of borrowing secured like a long-term mortgage, or is it subject to fluctuation based on the interest, the current sort of base rate?
Thank you. So our borrowing will be at fixed rates. We will be looking at that in conjunction with our Treasury Management advisors. There is a little bit more information about that set out in the Treasury Management strategy. Essentially, what we will look to do is obviously we'll look at the yield curve at the point of borrowing, and we will be looking to balance getting the best available rates against the risk, and particularly the refinancing risk. So with interest rates at them as they are at the moment, it's much cheaper to borrow for the short term than it is for the long term, but clearly that gives you less certainty. And if you borrow everything for 2 or 3 years, then you're introducing refinancing risk very soon. When we took the initial £213 million self-financing loans when the government handed over the housing stock to us back in 2012, those loans were taken deliberately so that they mature over a period of 20 years. So essentially we split the balance into 20 smaller loans. The first one matures, I believe, in 2038, and then each year after that, another 5% matures. So we'll be working with our Treasury Management advisors to work out the right balance. We're not going to go and take one loan for £400 million to mature on a specific future date, because that's obviously introducing huge refinancing risk in the future. We would take a sensible approach to that maturity profile.
Okay, that's very interesting and to understand. So as you make new incremental commitments, say you've got a sort of £20 million programme, will you do the same thing, or will you just take that £20 million and get a borrowing rate for that will last, the 20 years or something like that? I mean,
So the assumption is that each individual loan that we take will be fixed for a period of time. And that would usually be a minimum of 5 years and a maximum of up to about 50. But I guess what I'm saying is we will take a range of individual loans to make sure that we have a suitable range of maturities, that we've spread that refinancing risk over a period of time. So if we see the situation like we've had in recent years where interest rates spiked, you might have a period where you might have 10% of your debt that's up for refinancing, and that's going to hurt, but at least it's not 100% of your debt that's all up for refinancing in one go. That's what we're looking to achieve, on the basis that over time, interest rates go up, interest rates go down. But if you're projecting over a longer time horizon, you can have a little bit more certainty that on average, you're going to be at a certain level.
thank you very much. Thank you.
Thank you very much. Well, I have a couple of questions, as no one else has indicated to speak. So I do share the concerns that I think Councillor Dale raised about how much weight we're putting on the bad debt, the voids, and the new software, reducing things so quickly. Because with the best will in the world, even if we buy the new software in the beginning of May, there's going to be a run-in time. So I suppose I'd ask that to be considered, for, by the time it gets to Cabinet, to make sure those are robust. Because normally we'd expect some kind of lead time, though I do take the point that Samantha's made about the debt at the moment that we're holding off. I had a minor question. So we're bidding for a new model, Lacata, I think it's called, to complement the orchard management software. Now, when I started about 7 years ago, the orchard management was going to be all singing, all dancing, and fix everything. But obviously it's not. I suppose, from a scrutiny perspective, are we making sure that we're happy with that contract, that is a good value for money still going forward? Because obviously my understanding when we bought it, we wouldn't need to bolt on other bits of software. I think that's probably one for Samantha and her team. And my final question, which actually probably spans the general fund as well, is what I'm finding a little difficult with these bids, particularly in the HRA, but it is across both, is we don't have the level of detail we'd normally have. So you're looking at page 140 or page 143, we've got a lot of money coming out, 750,000, 400,000, 338,000, 197,000. But it doesn't say whether they're for people or things or repairs. But normally on a budget, I would expect that to say, 5 new surveyors at band X costing this much money. So I wondered, for me, if Scrutiny would support me, I would really like to ask Councillor Bird and actually I suppose Councillor Smith as well for the later part, whether we could just have a little bit more detail. Obviously, as councillors, we can go and ask the officer and say, can you just explain? But for the members of the public, these are big sums of money we're moving over to deal with things that need dealing with. But for me, and I think Councillor Ashton has kindly shared the question he wanted to raise as ward councillor, that relates to the same kind of thing. When we've got these big budget moves, you know, of hundreds of thousands of pounds or tens of thousands of pounds, I wonder if Scrutiny would support me in saying it would be just useful to have a little bit more detail about what that involves. Is it some more people we're employing? Is it a new computer system? You know, what's the timescale? Because obviously if we're employing new officers, that's fine, but there's probably a lead time of 3 to 6 months. And it would just help from a Scrutiny perspective for me to get my head around that. I don't know if Councillor Bird wants to come back or... and Councillor Davey, do you want to add? Please
I'm
go
asking
ahead.
for clarity of your question, if I'm honest, Councillor Pora. Are you asking for more detail now, or are you asking for more detail later, or are you asking for more detail about a range of things and have the officers had notice?
I'm not asking for
So
it now.
I just be clear about what
Of
you're actually
course.
after here before
Yes.
you ask for our support. So
So
I'm
what
not
I'm
sure what you're
asking
actually
for,
after.
yeah, it's not now. That would be impressive, but I wouldn't expect officers. But I was thinking certainly by the time it perhaps comes to cabinet, we could just have a little bit more detail so that it's a little bit more broken down as to what those quite substantial bids cover. So that might be, for example, if you look at page 143, you've got, you know, increased costs of void repairs and housing disrepairs, but it doesn't say what the money's going to. Is it staff? Is it new bathrooms? Does that make sense?
Does, but therefore we need to know which ones you're actually after.
I would actually like to say for all of the bids, I would prefer them to revert to how we used to have in
All
previous
the
years.
bids, and because I'm afraid I don't see it that different in terms of the general fund bids and the HRA bids than you appear to. So I think you're not, as you could probably guess, you're not going to get my support because it would be. But I would support you if you were specific about some of the bids that you feel are particularly relevant.
I'm absolutely happy to. The bids on page 143 and one on page 140, I'm more than happy to come back to officers with the details of that. I think it's just where we're doing something different. So we're saying, for example, £750,000 for damp, mould and condensation. That's top of page 140, B5464. I would just prefer to see a little bit more detail because I think that helps the public understand why we're doing this. And I appreciate it may not be possible for Cabinet, but certainly in future years, I would like
I would
that.
agree with you, but some bids don't need more. And I think when you said all of them, I'm thinking, whoa, I'm not sure that's going to create an awful lot of work for very little benefit.
You are quite right, Councillor. What I mean is the bids where we're making a substantial investment, my assumption is probably with staffing. It would be just useful to know the grade of the staff, the number of staff, because it's helpful, I think, for the public to know. But I'm also very happy for officers to use their judgment. As you say, if there's a very small bid for a bit of computer equipment, we don't need to know that. But certainly I've got at least 4 here I'd be happy to flag with officers. But obviously if Scrutiny disagrees, I completely understand. But just as I was going through with my Scrutiny hat on, I thought...
The problem
I'd like
is,
to know.
sorry, Hugh, the problem is, I don't know what it is you're after in terms of which bids, and I didn't know beforehand. So I'd like to support you, but if I don't know, it's very difficult to say yes or no.
Okay, well, I'll confirm it's the bid at the top of page 140 and 3 on page 143. Plus, I think potentially there may be some in the general fund, but we will come to those later.
Again, clarity, Chair, if you're asking for this not now, but subsequently, could that not be done by an exchange of email?
I'm more than happy to, but you did ask me to specify which ones, so that's what I'm doing.
Really now, can, Chair.
That's absolutely fine. I'm very happy to email afterwards. Would you like that to go around Scrutiny members?
If you're asking for our support, I think that's wise.
Absolutely, I'm very happy to do that. So the other question I had was just, about the orchard management, which I don't know if Samantha might be willing to take.
Yes, of course. MRI, what was Orchard Housing, is absolutely our main piece of housing management software that covers assets, repairs and housing management. With the best will in the world, I think whatever system you choose, there will be bits that work fantastically for you and perhaps bits that aren't quite what you need them to be. So as an example, the VoiceScape software that we've mentioned in the budget bid, that does far more than the equivalent MRI piece of software that's sort of similar but nowhere near as good. So from the point of view of us actually getting a grip of our arrears and bringing those down, we really need to have something that does far more than the software that we have at the moment. What I would say is that it does integrate with MRI. So that was really key with anything where we were looking at coming away from MRI, is that it integrates back in. So that absolutely does. You also mentioned locator. So yes, we are looking at that for some case management within our supported housing. We already have locator as our main piece of software for our housing advice and homelessness and the work that we do there. So it's already a system we have. This will just be an additional module within that piece of software. So it just has functionality that the MRI doesn't really have a case management. It has ASB cases, but that isn't what we want for this. So it's just about using other pieces of software that we already have in the council, but an additional module there. So that's what we've tried to do, keep within our own systems that we already have, and that where that is applicable, that they link back in with MRI, such as the Universal Credit Bot does that, and so does VoiceScape.
Thank you very much, Samantha. Do any other members, or I don't know if Councillor Young or... So we have Councillor Clough, Councillor Gorthrope, and then Councillor Young, please.
Well, thank you. Firstly, I really would like to thank Councillor Bora for drawing our attention to the this budget bid, and any budget bid that looks as rounded as 750,000 does immediately flag up in my mind the questions, well, how has this been calculated? So I think really what we need to know is how thorough those large estimates have been, how they've been derived at. So another question that seems to have been popping out from so are we saying that the new software are additional modules to existing established software that's well integrated into the operation of the team, or is it something that's standalone and coherently integrated? So I think it's a sort of sense of, because we all know that software leads you into distress and lots of losses of time and energy. So how integrated are they? Are they bolt-on modules, or are they who is going to stake their pension on a successful integration? Thank you.
I'm not sure I'd expect Samantha to stake her pension on that, but Samantha, are you able to comment on the robustness of these modules and how they would either bolt on or integrate with the existing Orchard software?
Yes, so we have done quite a lot of work with organisations that are already using these other pieces of software, that are integrating them with MRI already. So yes, we are comfortable that can be achieved, and that we will be able to do that here at Cambridge.
Thank you very much.
Thank you.
It's very reassuring. Councillor Gorthrope would. And just now, I can see Councillor Bennett, you have your hand up. I've noted that. We're going to come to you after we've spoken with members, so I haven't forgotten. Thank you.
Well, this is really a question, but I just wanted to highlight that, and you've got it in the risks, how much we would like to have a Homes England strategic partnership, and what that means in terms of our budgets and our house building programme. So I think that's on page 81 and elsewhere in the report. So I wondered if you could perhaps comment on that. I did notice as well that SIL is mentioned, which is a community infrastructure levy. Now, I don't think that's come in yet, but I know that we do want to have that. That's a separate thing. Yeah, so those are the 2 points, I think. Thank you.
Thank you. Who would like to come back on that? That's Samantha, again.
Sam or Ben?
Oh, Sam or Ben. Let's see who's going to volunteer.
It's really
Ben.
what it means if we don't have a strategic
Yes.
partnership, and if we do have a strategic partnership.
Yeah, okay. Ben, are you happy to take that one?
Yes, I'm more than happy to take that one. So, for the avoidance of doubt, a strategic partnership is with Homes England is where...
Ben, we're struggling to hear you a little bit. Are you able to just reposition your microphone? It's quite blurred.
Yeah.
Thank you.
Is that better?
Yes, that's better. Thank you.
So a strategic partnership is where Homes England provide a lump sum of funding subject to rolling out a housing development program. So we draw down from that lump sum if we get that agreed from Homes England. What that does, it provides financial certainty. It's much easier to plan ahead with these large sums of money and with these large capital programs. So there is an assumption built in to the program, into the HRA 30-year business plan. If we don't get the strategic partnership funding, that doesn't stop there. So there is a plan B, which still allows the council to bid on a site-by-site basis. So instead of having that security of funding across many years, we would have more uncertainty financially in terms of the house building program, because we wouldn't know if we get funding until we bid for it on a case-by-case basis. We've been very successful so far on a case-by-case basis, so we would expect that to continue, but it doesn't provide as much financial certainty. If we don't get the funding on a case-by-case basis, then we would have to review the house building program, but that's Plan C. So we would hope to get the partnership. If we don't get the partnership, then we would still have the opportunity to bid for funding on individual sites.
Thank you very much. Councillor Young.
Thank you, Chair. And I'd like to start by saying that I think these budget papers, the format of having everything together, it works really well, and they are a model of clarity. And so thank you very much to officers for doing that. My question really is all around the risk. So we are anticipating entering into quite high levels of debt. And we've calculated the amount of debt that we think we're going to be okay with. And Savills has come up with a number of 1.25 as adequate cover. Well, in the medium-term financial statement, the number is about 5. So, while I thoroughly support the house building aims that we've got, I do think that this is quite a high-risk strategy, and it would be great. And just to add to that, I think that the HRA, if I've understood the papers correctly, have made a reasonable surplus each year, and that's gone into the house building. We've made now some fairly big bids for cost of things that we really want to do, so there's going to be less money, there's going to be less surplus going forward. So that's kind of an additional risk. So I'd just like Jody perhaps to comment on how he sees the council sees this level of risk. Thank you.
Thank you, Councillor Young. Jody, are you happy to comment on that?
Thank you. Yes, Chair. I think, yes, it is a significant amount of borrowing. And I think when you first see the figure, it is, it stands out, particularly for accounts of this size. I think the important thing is that, we have taken the professional advice, we've worked with Savills, and we've looked at some benchmarking against the sector. The 1.25 target is fairly standard, sort of fairly average across the council housing sector. Many RPs actually, there are RPs out there that are currently below 1 and are in a bit of trouble. So we felt with Savills that having the 25% cover essentially was sufficient. In terms of sort of comparisons with the general fund and where we would borrow there, I guess it's a different type of income stream. There's always going to be a demand for council housing. We're always going to have that rental income coming in. So whilst, yes, there are risks around future government policy, for example, if we ended up with another period of below inflation rent increases or rent decreases, that potentially would cause an issue in the short term. But looking at that modelling over the longer term, we've built in that buffer, we're doing that sensitivity analysis. And I think all we can do is to try and make sure that we're continuing to plan in a responsible way, that we're constantly keeping that under review. And we have Savills on retainer now for the next 3 years, so they'll be looking at this on at least an annual basis in terms of refreshing the business plan, refreshing the assumptions. Obviously, if there are significant changes in the economy or significant changes to any of those assumptions, then we can remodel those very quickly and see what that means for the programme. And, you know, we will always have options around that programme if needs dictate. So I think we just need to keep that under constant review.
Thank you very much. Now, can I ask if members of the PAS committee have any further questions on the housing revenue account before I open it to Councillor Bennett, who I can see has her hand up? Anybody else? Last call? No? Okay, Councillor Bennett, would you like to speak online? We can't hear you, Councillor Bennett. We still can't hear you, Councillor Bennett, unfortunately. Sorry, we can't hear you. Are you able to just try and unmute again? Oh, unfortunately not. We're getting a buzzing sound, but nothing else. Councillor Bennett, you might want to just leave the meeting and rejoin. Would you be able to do that? That might reset up your microphone. Whilst Councillor Bennett is doing that, shall I sum up what I think we might have asked Scrutiny to take to Cabinet? Not a huge amount, because I think a lot of it is about just kicking the tires and making sure this is in the right shape. So what I had was there were, well, concerns over the delays about convergence, but sadly that is not within the gift of Cabinet to sort out, so I don't think we can put that to them. But I think we can note that. Someone, and I apologise, I've forgotten who, asked for some more details about convergence and the minimum and the maximum. I think that was Councillor Griffin, wasn't it? So I don't know if that's something officers may wish to consider with Councillor Bird before it comes through to Cabinet. Yes, it's a set amount, but nonetheless, what the lowest and the highest might be, the kind of outliers. We've noted the risks with the HRA and sought reassurance that, you know, that is being regularly monitored. I think that came up in various people's questions. I think at least 2 or 3 of us talked about, well, I think myself and Councillor Dale, talking about the voids, the bad debt and the new software. And just, oh, thank you, Councillor Bennett. We're just summing up what we've gone through and we'll come back to you in just one moment. Thank you. So void, bad debt and new software, I think before Cabinet, good just for officers and obviously Councillor Bird to be reassured that those investments are robust and the savings that are anticipated are within the timescale of them coming forward. And then in terms of some of the more detailed bids that I raised, because I think for the public it's important, I've agreed that I will email members of the PAS committee over the next few days and before Cabinet with some suggestions for the bids that might wish, perhaps request that Councillor Bird and officers provide a little more detail before it goes to Cabinet, just so when it's back in the open forum in the public, there may be some more information. Has anyone got anything else that they think I've missed? No? In that case, Councillor Bennett, I'm sorry you missed part of my summing up, but hopefully you'll be able to follow it on the video later. Do go ahead, Councillor Bennett. I think we can hear you now. Councillor Bennett, we could hear you and we can't hear you now. Councillor Bennett. I think she's disappeared. I think what we'll do, if Councillor Bennett is unable to rejoin us, as we have actually come in under time, the clock up there tells me it's 4:20, so I'm just looking at my phone to check. I suggest in that case we will take a 15-minute break and then pick up Councillor Bennett's question afterwards. We'll just give one more chance to see if she comes back in before we do that. And then after the break, we will move on to the general fund. Just so we've given anyone who's come straight from work some time to have a little bit of food before we put it back. Councillor Bennett is back. Councillor Bennett, are you in contact with us? Councillor Bennett, can you hear us? Or is the IT? No. Councillor Bennett, if you can hear us, We're going to take a short break. When we come back, you're very welcome to put your question. Alternative, I wonder if you perhaps might be able to email it to Dan at or in the chat, or to Dan at Democratic Services, and then we can at least read that out for you. So I suggest the time is currently 7:15. I suggest we'll restart just before 7, but please could we be back on time so that we can crack on and hopefully let you get home before the absolute maximum time limit. Thank you very much. Sarah, could you just pause the live stream? please. Welcome back to this evening's Performance Assets and Strategy Scrutiny Committee. Before the break, we were just unfortunately having some problems connecting with Councillor Bennett, who is online, and I believe she has now passed her questions to Councillor Clough. I don't think she's available at the moment. So, Councillor Clough, would you be kind enough just to read through the questions that Councillor Bennett wished to ask, please?
Yes, and Councillor Bennett sent her apologies. She had some meetings earlier today which worked, and so she doesn't know quite why it's gone down. Okay, so the first question was in relation to if there is an intergenerational transfer, does that constitute a relet? This is in relation to rent conversion. For instance, if somebody is at home, is looking after an older parent who then the property is then, does that transfer?
That might probably be better to ask directly to officers, just purely because I think the convergence issue is just a standard amount on each rent. So the tenancy transfer is a different thing that isn't affected by the convergence, unless Jodie's going to correct me if I'm wrong. Oh, Samantha might be able to.
Yeah, and...
carry on, Councillor Clough.
Yeah, and if it is, can there be an equalities impact assessment to determine whether that's fair? She's also got a question on interest cover, and I'll ask that next, but I can go straight on to that now if you want me to. Or yeah. Okay, so she understands that you've got 1.25 for the housing revenue account in terms of interest cover. On the general fund, it's 5. But what she's really saying is that we may be, with OWAB's law moving in and housing reform, into a different area in general, and she believes that just from her experience as a ward councillor, that there can be significant overspend that we're not aware of yet in terms of property state, and things are going to become more expensive. And she also is concerned about increasing void costs. And for example, going back to the condensation damp and mould situation, she says that she's got one example where there have been 3 return visits of the surveyor to a property, and it's just the property is going to require very significant costs. So it's what she's really saying is that she's asking is, are we sure that this is something we're on top of? And there is, she also raising a question about properties which are below band C and how they're going to be brought into be able to be rented. Thank you.
Thank you very much. I assume that's EPC-C as in the standard.
I think so, but
yes.
It was the end of the dictation. Thank you.
Yes, so I had a question about the ICR 1.5 versus 5, and with Arab's law coming in, whether whether officers are comfortable and Councillor Bird is comfortable that we have robust financing around there. I think there was a question about void costs increasing, and a question about damp, mould and condensation, and whether I think the budget was sufficient to cover those risks. I don't know if Samantha would be willing to pick those up, or Jodie, jump in if you need to.
Okay, I'm happy to pick up a couple of those. So in terms of the question around succession of a tenancy and a property, if a resident is entitled to succeed the tenancy and that property, then they have succeeded the original tenancy. So it remains at the same rent, and obviously rent convergence would be used to bring that up to formula rent if government allow us to bring that in. Sometimes people are significantly under occupying, so they may succeed the tenancy but not the property. In that case, the property they move to would be at the formula rent plus flexibility that we relet our properties at. So that, they would be able to move into that, but obviously they are still well below the local housing allowance rate and would be eligible for all of that rent to be covered through any welfare benefits that are in receipt. And just the other aspect that I was going to pick up was in relation to the voids. Yes, we are aware that our voids costs have been increasing, and we have actually commenced a project to review our void process and look to bring down both sort of the relet times, but also the relet costs as well as part of that project, looking at kind of conditions that properties are left in, and how we can address that to help with that. Thank you.
Thank you very much. Jodie, did you have anything to add?
Yeah, just to come back on the interest cover ratio point, and I think there's a couple of things to bear in mind here. I think, first of all, the HRA and General Fund are very different in terms of their risk profiles, and we have had specific advice from Savills as sector expert on the benchmark that should be applied to the housing revenue account, and we've gone with that advice. There is no interest cover ratio within the General Fund, no interest cover ratio target within the General Fund. So it may happen to be 5 at the moment as a result of decisions that have been made in the past, but it's not a conscious target that we've set that at 5. Within the General Fund, the Council has historically only borrowed where there is a specific business case to do so. For example, the only General Fund borrowing we have at the moment, external borrowing, is in relation to the Park Street redevelopment. So that's what we're judging the interest cover ratio against. And essentially what you're comparing there is the council's entire General Fund surplus for all of the services it runs against borrowing it's undertaken for one specific purpose. And the business case for Park Street obviously showed at the time, and is continuing to show, that the future revenues that redevelopment will generate will more than cover the financing cost of that development. So we look at that very much in terms of General Fund borrowing. We look at that very much on a case-by-case basis. So it may well be in the future that there may be proposals coming forward on Civic Quarter, for example, which again may include an element of borrowing within the General Fund, but there will be a specific packaged business case around that ensures that that revenue financing can be funded from within the project. So it's very, very different, and I think we just need to be a bit careful about comparing financing and risk within the General Fund to the HRA, because they're very different animals. Just on the EPCC point, so the current capital programme, which is Appendix IB, on page 150 of the reports pack. So the current capital programme includes investment of £47.7 million over 5 years, including the current financial year, to deliver EPCC within our existing housing stock, and then a further investment of £43.2 million over the subsequent 6 years to undertake further energy efficiency and or retrofit work within the existing stock.
Thank you very much. I think that concludes our item on the housing revenue account, and we're now going to move on to the General Fund. Can I just remind members that there are some pink papers, i.e. confidential papers. If anyone wishes to discuss those, we would need to vote to go into closed session, and I propose if we do that we would do it at the end of the meeting so we don't keep members of the public waiting online whilst we do that. So obviously I haven't had a request from anyone to do that, but should you wish to discuss something on the exempt papers, please can you make sure we're in closed session before that happens. I'm now going to hand it back to Jodie, who's going to give us an introduction to the General Fund budget. Thank you.
Thank you, Chair. So in the General Fund, I'm just going to start off by talking about the budget public consultation process that we went through in the autumn. So members of the committee may remember that we brought a budget setting context paper, which was approved by Cabinet in July last year and came through this committee in September, I believe, last year, which covered the approach to budget setting, the setting of the General Fund savings target of £1.5 million recurring savings over the next 2 years, and also the Council's approach to the public consultation on the budget this year. So the public consultation was open for 6 weeks during October and November. We received 512 responses, and the consultation was undertaken using the Council's online consultation platform and in line with our usual consultation policy, with a paper option also available. We widely promoted the consultation by sending over 7,000 direct emails to individuals, businesses and voluntary sector organisations. We advertised it on the council website homepage. I believe it was a banner at the top of the page for a period of time. And we also advertised it on the physical digital screens at the front of Mandela House and in the Cambridge Matters magazine, which is distributed to every household in the city. The detailed results from the consultation are set out in section 3 of the budget setting report and Appendix B, but just picking out one highlight that 72% of respondents rated the council as either excellent, good or acceptable for value for money. So I think that was quite positive. In terms of headlines on the general fund, so looking at the general fund, we generally assess the financial resilience and the medium-term financial position by reference to our 5-year funding gap. So this is essentially looking 5 financial years from now in 2030-31 by how much does our projected expenditure for the year exceed projected income. You may remember 18 months ago when we set the last standalone medium-term financial strategy, we were looking at a 5-year budget gap of £11.5 million. And if this current budget setting report is approved by full council, that budget gap will have been closed to £1.5 million over the space of just over 18 months. Looking at this report in particular, the July budget setting context report had a 5-year gap of 3.6 million. This budget delivers new net savings of £1.6 million with some additional other adjustments coming through as a result of changes to government funding and changes to inflation and other assumptions. So that's what gets us down to the £1.5 million. And all of the detailed budget bids are set out in section 4 of the budget setting report and also in the associated appendices. Local government finance settlement, there were significant changes to the way in which local government financing is distributed by central government this year. So we finally had implementation of the fair funding reform, which has been promised for a number of years now. I think it was first due to come in 2019 and was delayed due to Brexit first, then it was COVID, and then it was a change of government, but we've now finally got the fair funding reform. So this is essentially looking at how the total pot of MHCLG money that goes to local government is distributed amongst all of the councils in England. Essentially, this has seen our core share of funding without any transitional support decreased by 27%. However, there has been significant transitional support put in place by government which will limit the impact. So what we will actually see is our core spending power will decrease by 4.1% in cash terms over the next 3 years, which equates to a real terms loss of around 11.3%. We have known this was coming for a while, so whilst it is difficult, we have been making preparations. We've been building this into the forecasts, which is why we've still been able to close the budget gap, even with that loss of funding. There is significant uncertainty around business rates at the moment. I think we've seen a reset of the business rates growth that we've accumulated over the last 12 or 13 years. At the same time, there are changes to the business rates retention system. There is a full business rates revaluation to take effect from April 2026, which means every business premises within the city has essentially had their business rates recalculated, and that is likely to lead to a spike in appeals. So there is significant uncertainty again about our future business rates growth. So for the purposes of this budget and the medium-term financial strategy, we are not assuming that we will get any above baseline business rates growth over the next 10 years. So where we are predicting that growth, we have modelled for that to go straight into reserves rather than to essentially go towards funding services to err on the side of prudence. So in terms of what our core spending power looks like, and just a word of caution, first of all, government have changed the definition of core spending power. So they are now including certain grants that weren't previously included within core spending power. So please take care if comparing these figures with figures that have been issued in previous years. You may be used to me talking about core spending power around £20 million, but they've now rolled in a lot of additional historic business rates growth income and other grants such as homelessness grant, which weren't previously included but now are. So we need to make sure we're comparing on a like-for-like basis. So on that like-for-like basis, our core spending power will decrease from £33.3 million in the current year to £31.9 million by 28-29. Following which we would expect another, hopefully multi-year settlement, which would look at the next, hopefully 3-year period. It's worth noting, within that 28-29 core spending power, we still have around £2 million of transitional protection funding, which I think it has to be assumed would potentially fall away in the subsequent settlement. So I think there are still further losses to come in the future. But obviously, that's very uncertain in terms of future government decision and what might come out of the next comprehensive spending review. What does this mean for council tax? So the finance settlement does assume in calculating the core spending power that all councils increase their council tax by the maximum permissible by the referendum principles. So, i.e., if any council chooses not to adopt the maximum increase, then they end up with less funding as a result. So we have modelled this into the budget. So we've modelled in a maximum increase of 2.99% for each of the next 3 years, which would see the Band D preset for this council increase from £232.13 to £239.07. That's an increase of £6.94, which equates to roughly 13 pence per week, with all other bands to be increased in proportion as set out in the legislation. In terms of capital spend on the General Fund, we have carried out a full review of the capital plan, including future forecasts. We are looking to apply some transitional funding from the government, along with some excess reserves that we currently have above the target level, to fund some immediate capital spending requirements over the next few years to remove the requirement within the General Fund to borrow, which had crept in the last couple of iterations of the MTFS. So we are now back in a position where we are able to fund routine cyclical capital spend, for example, on our administrative buildings, on our fleet, on our estate, from revenue resources without the need to go out and borrow to fund that ongoing spend, which is a much more sustainable position to be in. What this means in practice is higher revenue spending on capital in the earlier years as we kind of get over that hump and use those reserves, but that will see a long-term benefit through reduced financing costs in the future. And I think by year 4 of the current MTFS, we start to see that benefit coming through in lower capital financing costs in the future. We will still need to look at borrowing on a case-by-case basis, as I mentioned earlier. So we did borrowing for Park Street. If we're bringing forward large projects, for example, Civic Quarter, that will almost certainly need to involve an element of borrowing, but that will be borrowing tied to a specific project and a specific business case rather than general borrowing. For example, to replace council vehicles, we'll be able to fund that through revenue. What this all means, final slide for the General Fund reserves. So the 3 lines on the slide here, the bottom line, the green line, is our target reserve level for the past 2 years and then projected forwards based on inflation. Now, the reason that target has increased significantly in the current budget setting report is due to the uncertainty around local government reorganisation and the need to reflect that within our prudent minimum reserve balance. But following 2027, we see that going up in line with projected inflation. The blue line is the important one, really, I guess, because that's the projected General Fund reserve balance without additional business rate growth. As I said, that's highly uncertain. The orange line is where we could potentially be if the business rate growth that we're currently projecting does come through. So that will give some additional headroom. But as you can see there, the blue line remains comfortably above the green line for the next 5 years. So that's good evidence that we have a sustainable position in the medium term. The reason for the reduction in the current year and the next year is a deliberate use of those reserves to finance historic and ongoing capital expenditure, and also some transfers to earmark reserves that are proposed within the report, including £2.5 million to a reserve to pay for some of the transitional costs associated with local government reorganisation, and a further £1 million contribution to the Civic Quarter Reserve. That's everything on the General Fund, Chair. Thank you.
Thank you very much, Jodie, and thank you so much for all of your work on this so far, and the HRA, because it's a very large piece of work, as I'm sure we've all realised as we've read it. So I'll move to questions now. So members of the PAS committee, who would like to ask some questions? Councillor Clough. Councillor Clough, you go ahead. And Councillor Davey. I thought we were going to go home very early at this rate.
Firstly, what I'd like to understand is, are there any, presumably, if the Civic Quarter project is to roll ahead, and I think we've been given notice to leave our sort of council rooms and end of the year sort of thing, then presumably there's some costs that are already baked into this budget. Is that correct? If so, I'd also quite like to understand whether it's there's also an allocation for another £1 million to the Civic Quarter Reserve. I'd like to understand what that's about. And also, I'm looking at the General Reserve breakdown on page 88. What I can't really, I'd like to understand how that's, whether the £20 million that was allocated to the Civic Quarter, where that is that been taken out? And well, that's my questions for the moment. Yeah.
Thank you very much, Councillor Clough. Jodie, are you happy to take those?
Thank you. Yes. So the budget reflects the decisions that have already been taken in respect of Civic Quarter. So the additional, the initial £4 million that was allocated, and then the additional £4 million that was allocated by full council in the autumn to take us up to the planning submission and feasibility stages of the project. And then there was a promise that any further investment will need to come back for a further full council decision in the autumn. So we're not projecting anything further in respect of Civic Quarter in this budget, because that will be subject to a future council decision. And when those papers come forward for council decision, clearly any financial impacts will be clearly laid out in those papers for members to consider, including the ongoing impact on the general fund. In terms of the Civic Quarter Reserve, no, the money that's been put aside in the reserve is still in the reserve, to the extent that it hasn't been spent in line with the approvals already given by full council. And the additional £1 million transfer is specifically to cover any potential costs associated with the potential offering of a replacement venue while the Corn Exchange is closed. So that's for a specific purpose. But again, that's earmarking the financing at this stage. The actual decision will be for members to take, and there'll be further reports coming through to Cabinet on that.
So are we now saying that potentially the Civic Quarter cost has now risen to 93 million I mean, so we started off with 20 million, right, that's allocated. Two tranches of 4, which is 8, means that there's a reserve of left 12. Now, are we then to build the content of the Civic Quarter Reserve up to 21? Is that what you're trying to say? Is this what this allocation means?
So there have been further allocations to the Civic Quarter Reserve beyond the initial £20 million as approved by full council. So I can get the figures for you, and I can show you all of the ins and outs and what's been allocated by council and when and how that's been spent. I think we need to be careful not to conflate the contributions into the reserve, which is one source of financing for the project, with the overall project cost, because as I mentioned, the overall project, if it goes ahead as currently planned, is going to cost significantly more than £27 million. So we need to look at other sources of financing as well. The reserves will form one part of that picture, but when the paper comes back to full council for a decision on that, all of that will be clearly laid out in terms of the financing sources and how that impacts. But I think, to be clear, there are no decisions on Civic Quarter within this budget apart from the decision to allocate £1 million into that reserve for that specific purpose.
So the reserve has gone from, are you saying the reserve?
Councillor Clough, I just, because we're quite pressed for time, would it be okay for Jodie to follow up with you afterwards just to explain where that's come from, unless it's a particular scrutiny-based question?
Yes, I'm happy to do that, but I also, the reason for this scrutiny issue is I think the fact that there's another 1 million being allocated to the Civic Quarter is quite important from a transparency point of view. Thank you.
Thank you. Is the 1 million already agreed? Did you say that already gone through council? No, okay, this is a new one, right? And just to confirm, obviously the Civic Quarter being such a big project, I think it is extremely likely that will be coming to scrutiny in the future before any decision goes to council. But obviously at this point we can only scrutinise what we've got in these papers, which doesn't include any future borrowing requirements because we don't have the costings for that yet. Is that correct? Jodie's nodding, so I've got that right. But thank you, Jodie. If you were able to update Councillor Clough, that would be great later, just to go into the details. Thank you. Who would like to speak next? Councillor Davies, apologies. And then we've got Councillor Gawthorpe and Councillor Dale.
Please don't apologise, it's fine. Because it's my first comment today, I'd like to congratulate Jodie and Simon and Jerry for the way this is set out. Like others have said, I think it's much clearer than it's been the case in the past, and it brings things together in a way that I think is incredibly helpful, so thank you. My first question is in relation to the Folk Festival. There are two bids related to the Folk Festival, 5417 and 5418. 5417 relates to a one-off for marketing, and I'm just wondering, why is it one-off? Because one would anticipate that to maintain the success, which we hope for this year's Folk Festival, you'd want more than a one-off marketing bid of 60k. And that's also linked to the 5418, which is about the surplus that's identified. Now, like all of us, I think we hope that the Folk Festival will be a rip-roaring success, but are there assumptions being made here that might not actually be the case, bearing in mind the history of the festival and also the state the festival's in elsewhere in the UK? Thank you, Chair.
Thank you very much. Jodie, are you happy to take that? Please go ahead.
Thank you. If I can take the second part, and then I might ask Sam Shaft to come in on the marketing, if that's okay. In terms of the budget bids, so the decision that was taken by Cabinet last year was essentially to plan for a break-even position on the Folk Festival. So what this budget bid does essentially is removes a small residual surplus that was baked into the budget from previous years. So it's not quite a technical adjustment, but it's implementing the decision that was made by Cabinet last year to assume for the time being that this will be break-even going forwards. Now, clearly, we will keep that under review on an annual basis, and particularly following this year's festival. And if there is a case for an increased income bid as part of next year's budget setting round, then that can clearly be brought forward.
The actual bid is reducing over a period of 5 years, and if I'm honest, I could understand if it was for the next couple of years, but it seems a bit strange, if I'm honest, to have that baked in over a number of years. And I'm still not quite clear. I understand what the logic behind that might be.
Okay, so just on that, those numbers are essentially the numbers that were required to bring the Folk Festival cost centre to zero in each of those years. So what we would have had is you would have probably had expenditure assumptions which were being inflated at a different rate to income assumptions. So within the old budget, we essentially had a decreasing income line. So stripping that out, it looks odd, but essentially that's reducing it to zero for each of the next 5 years.
That's great, thank you. Thank you, Jodie.
And Sam, would you like to comment?
Yep, of course. So the more details probably if we go back into the paper last July when it came to Cabinet, not to pull it out now, but the 60,000 for marketing, which is a one-off cost, was part of recommendations from the consultants to do some one-off work on our data, on our website redevelopment and branding, and also in recognition that what we are proposing for this year is a slightly different format, and we had a fallow year last year, so there was a requirement for increased marketing to ensure the success of the Folk Festival this year in its new guise. So that's what was identified via the consultants' work and what we've been effectively doing over the last few months. The general marketing, sort of year-on-year marketing would be factored into a break-even position, if not a surplus position, as we go forward over the coming years.
My question really isn't about what we're doing this year, it's about the future, Sam, which is why I'm asking, why is it only one-off? Because I think maybe that's subject to review that will come as to whether or not we'll need more funding for marketing in the future.
I think clearly we're going to have a review once we've had a successful Folk Festival this year and see what we might need. current assumptions were that those costs, that 60,000, which is identified specifically and was specifically identified last year, was to deal with a number of one-off improvements in our systems, website, branding, and data, so that we can effectively deliver what we need to in terms of income. So you may be right. There may be a review after this year, and we may identify further requirements and changes, I'm sure, but at the moment that's not identified clearly.
Okay, thank you, Sam.
Thank you. I mean, in terms of what we could feed back to Cabinet, do you want to feed something back to Cabinet and to Councillor Smith, who is obviously patiently sitting here listening to us, in terms of asking Cabinet and Office to review that before this comes to Cabinet in a couple of weeks, just to make sure they're robust, or something about a review? I'm just keen that as the Scrutiny Committee we do make some recommendations to Cabinet to allow them to make sure this is robust when it does come forward.
Sorry, Chair, I keep on putting my microphone on when you're speaking. I don't want to step on Karen's toes, because I know this is the other, I think this is the other Scrutiny Committee, but it's more about ensuring, if we're looking at the long-term success of the Folks Festival, which is something we want, it's therefore about ensuring we have sufficient finances going ahead, and that whilst I hear what Sam's saying, it's about therefore ensuring that a proper review does actually take place this year, because it may well require us to put more in, or indeed, if everything goes tickety-boo, less in. But it's about making sure that that's part of that, and because this is talking about the finances, it's making sure that the financial commitment from the council is still there. But as I say, I don't want to step on Karen's toes if they've already got this covered in their script.
Well, I'm happy to, we'll go around, Councillor, if you perhaps, when you do speak, if you'd be able to address that. I mean, if committee wants to, I'm very happy to take that forward as a recommendation, that is something Scrutiny has raised as a concern, at least, because I think this is kind of what our role is exactly, is, as you say, hopefully everything will be brilliant, but we want to make sure that if it doesn't go as well as we hope, we've got a contingency there. So I'll put that on hold for a minute and wait to hear from Councillor Young about that.
Chair, just to say, it is on the forward plan. Sorry, just to interject that it is on the forward plan of the other Scrutiny Committee to pick up after this year's Folk Festival.
Thank you very much. Who do we have? Oh, Councillor Gawthorpe Wood. Is that you, Councillor Dale? Yep. Go ahead.
Okay, well, I've got several questions. Now, starting at the high level, I wondered if you could explain how the changes to the local government financing, what the changes are to the local government financing formula. Now, fortunately, we've got this transitional funding that protects us to a large degree, but I do worry about whether it's whether the formula is meeting what we need in a city with students, commuters, etc. So that's the first question. Then the second one is really about ring-fence grants in the court spending powers. And I know that includes homelessness, because you said that in the report, and I think you mentioned something else, but I wonder whether there are any other major grants that had now shifted into that. Then I have a question about the consultation and whether we have biases built in, and do we need to do it differently. It worries me that although there was a lot of work done to try and get responses, we still have quite small numbers of responses. What was it, 571 or something? And whether or not there is an inbuilt bias on income and demography there. How we get over that, I'm not sure, but unless you have a stratified survey, and whether we want to go down that route, I'm not sure. And then a question about business rates and the lags, and do we have to pay into the collection fund before we get the money from the business rates and appeals? And I think that's something the public might want to know a bit more about. I'd probably better leave it there if you could.
Thank you, Councillor Gawthorpe. And just to add, Councillor Gawthorpe would mentioned the funding and the student numbers. I understand the student numbers are perhaps not calculated in the most representative way, so I don't know if you're able to comment on that as well, potentially, Jodie. Thank you.
Thank you. Yes, sorry, there was a lot there. Yeah, so you've asked me to talk about the finance settlement, and you were all hoping you were going to get home tonight. That's my specialist subject. I could go all night. Yeah, so it's essentially, it's very complex. So there are 7 individual funding formulae related to various different local government services. There are only 2 of them that actually impact us, which is the lower tier foundation formula and the temporary accommodation formula. There are other specific formulas for upper tier services, for highways, adults, children, etc. Essentially, what you need to bear in mind about the finance settlement is it's an assessment of a council's relative need, not absolute need. So this is all about distribution, and MHCLG have a pot of money that they're given by the Treasury each year to distribute to local government, and this is all about how big our particular share of the pie is. So in any funding reform, there will be winners and losers in terms of how that pie is distributed. So what they look at essentially is they look at each council's relative need. They use various different data inputs for that. And some of them are really quite granular. I think for the children's formula, they use kind of individual case level data. So they really do go down to a very, very high level of detail. For the lower tier, it's largely based on population. It's about 85% based on population. Now, we've done quite well as a city because we are one of the fastest growing cities in England. And we had the fastest growing population, but certainly between the last 2 censuses. Although maybe not quite so fast growing in the last couple of years, which means we didn't quite do as well on that as we might have done if they'd used an earlier projection. Daytime population is a factor as well. So they do take account of the city's daytime population, so the number of commuters and visitors that we come in. But crucially, and this is where you can really go into the detail, they only count domestic visitors. So all the foreign visitors that come to the city don't get counted, and clearly we have quite a lot of those. So we are disadvantaged by that methodology. The argument for that, I believe, is that the government don't feel there's a sufficiently robust data source for foreign visitors for whatever reason, so they don't get counted. Deprivation is another big factor, and actually in the latest indices of multiple deprivation that were published last year, the council actually slipped down about 50 places. So we are relatively less deprived as a city than we were relative to other councils, and what that means, unfortunately, is less funding. And our funding consultants did calculate that alone could have cost us around £4 million a year in core funding. So particularly for district councils, you're talking about your share. We get a very small fraction, a fraction of a percent of the total pie, but it's such a big pie that the smallest kind of movements in that source data can have a massive impact. So there will always be, kind of anomalies in the system, I guess, and government has to take some approximations. They have to take some decisions about what's important and what isn't. The weighting that they give to deprivation in a settlement, for example, is largely judgmental. There's not really much evidence behind that, but they assign a weighting. Student numbers, Councillor Porra mentioned. So the initial proposed methodology was that student numbers will be counted from the council tax base information that's submitted by councils in October. Now, clearly in October, many students haven't arrived or haven't yet registered. So we made representations through the consultation that wasn't right, and the government have now agreed to take the average of the figure from October and May, which is still not perfect, but it's better than it was, so that helps us a little bit. So there's all sorts of things like that, but it becomes very complex because clearly every council is looking at where they benefit, where they lose out. Everyone's making representations to the centre, and it becomes very, very challenging. In terms of the ring-fence grants you mentioned, it is homelessness really is the only one the only significant one that we receive. So there is a new ring-fence grant. What they're effectively doing is consolidating the old homelessness prevention grant and some of the old rough sleeping grants into one new homelessness, rough sleeping and domestic abuse grant that we will be receiving under the new settlement. That will be around about just over £2 million a year for us in the new settlement. That no longer includes the temporary accommodation element because that's now included within the core finance settlement. So they've done quite a lot of consolidation and shifting things around as well, which, as I said earlier, doesn't make it easy if you're trying to compare what we had previously with what we've got now. Sorry, I've gone off track a little bit. The other questions?
So there are two others, business rates and the lags versus collections. Oh,
The live stream appears to have failed.
we
I've got
may
a
have
message
lost
on
the
my
live
system.
stream. Let's give it a moment. We can carry on without the live stream, although obviously it's not ideal, but we don't have to be live, I understand, Dan. So should we just...
Shall I repeat the question?
So the question, Jodie, yeah, it was business rate lags and the consultation biases, I think, was that correct?
Yeah, and whether there's a lag in with appeals, and do we have to pay to the business rate collection fund before we get the money in?
We'll just hold fire just a moment because I'd like to get the live stream up if I can. There we go. We gain time on the HRA. We're gonna possibly lose it on the.
Sorry.
Okay, it appears that we are still live. We just can't see it in the chamber. So I apologise to the, no doubt, lovely officers trying to watch online, but hopefully if we need to bring them in, we'll come back to them. Jodie, are you okay to continue and answer Councillor Gawthropwood's questions? Thank you.
Thank you, Chair. Yes, so in terms of business rates, yes, you're absolutely right. So the way the business rate system works is essentially in January each year, we have to submit an estimate to government of how much business rates we think we'll collect in the following year. And that is the amount that we will then receive in 26-27. So that's the amount we credit to the general fund. However, when we actually collect the business rates, they get paid into a collection fund. And essentially, if we collect more than we were predicting, then we'll end up with a surplus in that collection fund, but we won't receive that into the general fund until the following year. So there is a lag there. Obviously, it can go the other way round as well. If we collect less than we were expecting, then we end up with a deficit, which is what we've got this year. Now, the deficit that's arisen this year is primarily as a result of business rate appeals. So this is where businesses essentially appeal their valuation. Now, we as a council have no control over the valuation process. All valuations are undertaken by the Valuation Office Agency, which is an agency of HMRC. They go out and value all the business premises and essentially set the business rates on that basis. And businesses then have the opportunity to appeal those valuations if they don't feel that they're accurate, and many businesses do. And then the Valuation Office Agency determines those appeals. Unfortunately, because of the volume of appeals that they receive, there can quite often be quite a backlog, and sometimes it can take several years for those appeals to get resolved. And in the meantime, if the appeal finds that the valuations were too high and the business has been overpaying for all that time, then we can end up having to make significant refunds to businesses when the appeal's finally settled.
Yes, I think as brief as possible if we can. I think we're still online, so we'll keep going.
Just what the impact is of that, or what we think the impact might be in the future, especially now business rates have been reset.
So based on the experience of the past couple of years, we have built in I would say, a very prudent assumption on business rate appeals for the following year and for the next settlement period of around about 5% of rateable value. We are looking at that. We do have consultants as well that look at that with us. And we're looking at that at the moment with the consultants to see if there's an opportunity to bring that down slightly. The impact will be essentially any excess business rates income drops into that business rates growth line and then straight into reserves. So if we do reduce the appeals provision, there will be no impact on the savings target or the overall position. But what it will mean is the orange line effectively on the reserves graph will go slightly higher because we'll have a bit more dropping into reserves on the assumption we get it all. And your last question, sorry, was on budget consultation, wasn't it? I mean, all of the demographics are included at Appendix B. In actual fact, when you look at the demographics, we are fairly well represented in terms of income. We are reasonably represented in terms of gender. Where we are less represented is on age, and we still have a disproportionately high response level from those over 50. So I think if we were to look at anything for future consultations, I think it's a focus on how we potentially encourage more younger people to engage with us.
Thank you very much, Jodie. Councillor Dale, I think you're next. If anyone else wants to speak, please do let me know.
Thank you, Chair. So just noting under savings at the moment, so we discussed a little bit, but for the committee, I note there's a very substantial saving coming from the employer's pension this year, which does provide significant funding assistance to the council overall. I guess there is a danger that if interest rates drop more quickly than expected, then liabilities will go up, or that the assets could be devalued if we see, there's this talk of a tech bubble, etc. So I just wondered if you could give any more information around the level of certainty we have from the actuary in this regard, and when this will next actually come up for review.
Thank you. Jodie?
Thank you. So the pension fund is reviewed by the actuary on a triennial basis. The last review was undertaken with a valuation date of 31st of March 2025, and that then sets a contribution for the 3 years starting from the 1st of April 26. So the contributions lag a year behind the valuation by necessity, because obviously you need time to do the valuation and then set the contributions. The last valuation, as at 31st March 25, found that the council's share of the pension fund was 143% funded. So, i.e., the assets are 143% the value of the projected future liabilities. So that's quite a significant overfunding position, and it is fairly representative of the sector as a whole at the moment. On the back of that, the actuaries proposed reducing our contribution rates. Now, for prudence reasons, the actuaries won't normally allow the contribution rates to decrease by more than 2% per year, but they have agreed in this case, because the fund is so overfunded, that we can take the full 6% decrease in year one. So rather than 246, we're going for the full 6% in year one. The actuaries comment on what they call the risk of regret, which is the risk that the contributions will need to increase at the next triennial revaluation in 3 years' time. And the risk of regret with our current contribution rates as proposed will be between 1% and 7%. So it can never be entirely ruled out, but at the moment we are sitting in a position where we are reasonably overfunded. Therefore, it makes sense to reduce the contribution. And arguably, had the 6% cap not been in place, we could potentially have been looking at a larger reduction in contribution. But clearly, the actuary has safeguards in place to make sure that we don't essentially reduce the contribution too much and then create a problem for ourselves in the future.
Thank you very much. I had Councillor Clough next, and then Councillor Gorthcott-Wood.
Yes, I was wanted trying to understand on page 122, the crematoria reduced income, because it talks about the bereavement services continue to deliver a substantial net surplus of 586. So are we saying that it's dropped and that's why you need another 300,000? So previously it would have been generating 886. Is that it? So what's well, I mean, given that it's dropped, is that something that's at the moment it looks as if you're saying, well, it's just a one-off drop. But is there an issue around that the services aren't commercially attractive any longer? People are doing in some of the text here. So what's happening in that area?
Go ahead, Jodie.
Thank you. So yes, you're absolutely right. So essentially, without the reduced income bid, this budgeted surplus next year would have been 886, and this bid will reduce it to 586, which reflects more closely the surplus that we're forecasting to deliver in 25-26, with I think a little bit of a stretch target on. So the service have been challenged to try and increase the surplus that they're forecasting this year. We need to recognise that they are operating in a commercial environment, and bereavement services are a commercial environment. It's a free market essentially, so there are competitors in the local area. There are competitors nationally now, with many more people opting for direct cremation services elsewhere in the country. So there are various market factors in play. I think I would have to take this back to colleagues for a more detailed response, but I'm happy to get that for you.
I appreciate that, because if you could be looking at 300 this year, 400 next year, 500 the following year, in order to make it balanced, there could be a bit of a hole that we just don't know about. Thank you.
Thank you very much. Councillor Gorthrope.
I just wanted to ask, it's in the main text of the report, but the two bids for, hang on, if he's looking for it, it's weed clearance and increasing the amount, of the lighting strength of street lights, which the county provide, but we are paying to ensure that the lights are at sufficient strength for a city, and again on the verge's maintenance, which is the county responsibility, but we're doing it for them. What has been the liaison with the county to try and get them to fund this properly? So that was my first question. I mean, it's clear that they aren't funding it, so we are. But what negotiation is taking place? And then the second question was on, well, local government review and the risks. And of course, there are a lot of risks. And is the reserve that we've put in place enough? I've got another small question, and that's really about commercial investment, commercial property investment. Now, I understand from the report that we can continue to invest in our existing portfolio, but we can't buy or invest in further commercial property. Have I understood that right? Thank you. So those are the three questions.
Thank you, Jodie.
Thank you. I mean, in respect of those county services that you referenced, I think it's important to note that the county are providing a statutory service, and then what we are paying for is an enhancement to that statutory service over and above the statutory minimum, and that's a decision that's been taken by members of this council. So we're not paying for another council's statutory services. We are paying to enhance the level of services for city residents. If you've got sort of specific, if you want more specific detail about the conversations that have been had, I need to take that back to colleagues. In terms of commercial property investment, yes, you're absolutely right. So we are permitted to invest in maintaining, enhancing, improving our existing commercial properties. But we're not permitted to buy new ones by the Prudential Code and the rules that have been put in place by Treasury back in, I think, 2021. So we are restricted in that sense. And sorry, was there a third question?
Commercial properties, really what the impact of that is, you know, would we otherwise, I mean, it sounds as though our commercial property is doing quite well, but is it a problem that we can't invest more in the future? The other question I had was on the local government reorganisation and the risks around that and the reserves. And by the way, I'm happy with the response regarding how I think our residents do want improve the enhanced lighting, and it seems as though streets of verges are something that they have asked for this to be done, this enhanced service.
Thank you very much. Go ahead, Jodie.
Thank you. Yes. So just coming back to commercial property, yes. I mean, our portfolio does perform well. You know, I mean, would we invest more if we could? To be honest, it's not something we've looked at recently because we know that we can't. So it's a little bit hypothetical. You know, we're always looking for opportunities, but we are restricted in what we can do now that we're no longer permitted to invest for yield. In terms of local government reorganisation, clearly, if that goes ahead, that there are going to be significant transitional costs across the system. And I think you can look at what's happened in other parts of the country that have been through this process, Cumbria, Northamptonshire, etc. You know, we are potentially talking about tens of millions of pounds of transitional costs across the Cambridgeshire and Peterborough area over a number of years. Now, that will obviously deliver savings in the longer term, and there will be a payback period, and at some point, that initial investment gets returned. But there is a lot of upfront costs. I think there's no doubt there. The £2.5 million that we are proposing putting aside in a reserve is really to cover. It's a prudent estimate of what of the costs that this council may incur pre-vesting. So it doesn't cover costs that will be incurred by the future authority after vesting. This is looking at the preparatory work that needs to be done across the system, and in line with the proposal B that was submitted by the council to MHCLG, and a prudent estimate about how those costs may be shared out between the 7 councils that are involved, but nothing is set in stone as yet.
Thank you very much. Yeah, I'll just ask for another round. We've got Councillor Clough. Anyone else want to ask a question? Councillor Clough, go ahead.
I've just got 2 quick questions. So, when you're referring to the 2.5 million, I looked at the paper that was presented for the option B, and it looked as if you were talking about that the pre-vesting costs were, in the first 2 years of that period before the post-vesting costs. But it seems, I haven't got my laptop open, but it seemed to be a much lower figure than 2.5 million. So are you trying to buffer more than you would expect from that, what was submitted to the government, or?
So the pre-vesting costs in Proposal B for the whole county were significantly higher than 2.5 million.
Okay.
I think it was in the region of 17 million plus. So what we're looking at is potentially how that cost might be shared across 7 councils, but clearly the conversations with those other councils are yet to happen in terms of how that might happen in practice. So that's not to say that our share will definitely be 2.5 million. It's saying that we are putting that aside now as a prudent estimate of where we might end up over the next 2 years.
Well, thanks for your reassurance. I obviously recalled the wrong figure. So the other question I had was related to, I noticed your comment about the favourable responses to the consultation, but I was also quite startled by some of the responses on page 112 and 115, where some of the text comments that people were seeking seemed to be sort of slightly at a difference in that. So people were actually wanting you to, the council to focus on its core services, and feeling, you've got a sense of resentment coming out of those two documents. Now, I just wondered, why do you think there was a discrepancy between the perception of good services and what was written down? Or was that just sort of a collection of sort of disgruntled comments that just got pulled together in the report?
Go ahead, Jodie. Apologies.
Chair, can I answer that question?
Absolutely. Do you just want to introduce yourself, Councillor Smith?
Yeah, I'm Councillor Simon Smith. I'm the Cabinet Member for Finance and Resources and the Castle Ward Member. Thank you, Chair. There is a disconnect between the number of people who answered the questions and the number of people who went into free script. And I think it was around about 115 people, or it was quite a small number of people made those comments. And in that context, it's quite possible to game a consultation. So if you get, a dozen or more people saying the same things, then that can be picked out in the analyses. And I think that was an unusual thing that happened this year. We were seeing some quite, I would say, right-wing type comments coming through about reducing the council tax, binning zero carbon, this sort of thing. Things that you never hear in Cambridge, normally on the doorstep, or in previous consultations. So I think we have to take a rounded view of what the public is saying, both from the previous consultation and this one, and what we all hear on the doorstep from people. But I think we can take away the overall message that people want exemplary public services. That's what they asked us to spend more money on. They want the basic things done well, and we're responding to that in the budget proposals, which have been in front of you today. And overall, people are generally, as a majority, if you see the pie chart, there's a lot more people saying the value for money is very good, excellent, than saying, poor or very poor or very poor. I would say this though about the consultation. I'll be absolutely blunt. I think one of the things that people said was that it's kind of like the objectives that set out there were kind of ambiguous and difficult and conceptual rather than quite more concrete, which people can actually get to grips with. And I think that's a big takeaway from this consultation process. It's not a satisfactory process, and we've discussed this before, simply because the way in which the budget making is tied to the government's timetable, bringing in the local government funding settlement just before Christmas, it makes it difficult and almost impossible to do a proper 6-week consultation for the public. Having got that into before we actually then have to comply with the government's requirement to set a budget in February. So this is why we have to set it out in general terms, and we'll take away again what can we do to make this a better, more convincing, stratified sample. And I think I'd rather like to hear more from Cambridge residents and those that live out the city, who I'm not quite sure they're interested in making their comments on what goes on in Cambridge is actually is.
Thank you, Councillor Smith. And I think when we considered the consultation at our first meeting of this committee, I think we did highlight that next year, again, we'd welcome seeing that in advance so we can share the feedback. So I hope that members will note, as Councillor Smith has noted, some of the comments here, and particularly I think the age disparity that wasn't quite as representative. So I hope that will come forward when that revisits scrutiny, probably next September, I assume, which I'm sure Councillor Smith will be keeping an eye on. Thank you very much. Do we have any more questions? We're running nearly to the end of our time. Councillor Young, any questions? And also, are you comfortable with what obviously Councillor David was saying in terms of the Folk Festival? Thank you very much.
Thank you, Chair. Yes, absolutely. We have it on the list, as Sam Schaaf said, and we will be looking at it after the festival, so not in time for this year's budget. But yeah, I'm sure it'll be taken into account at that point. So I've got a couple of things. One, I'd like to ask about the transitional funding and what that's being used for. I think that's being connected to the use of the idea that we've funded the finance costs and have now changed this policy to be funding minor capital items from reserves. So just wondering whether that has been a sensible use of that transitional funding, and that, and then just a couple of questions on some of these bids. Just some background about the playground investments. That's sort of why is this not something that we've been doing before? Why is this coming up now? The weed clearance item, which I think someone else already asked, where is that going to be spent? I think I'll leave it at that.
Thank you very much. I think, Jodie, are you happy to talk about the transitional funding?
Thank you. Yes. So in terms of transitional funding, there are two elements to transitional funding. First of all, the first element is that the fair funding reforms are being phased in over 3 years. So we will not immediately drop to our new funding envelope, but that will take place over 3 years. And then the second element is that the government has applied a 95% funding floor for district councils such as us, which is what limits us, for technical reasons, to a 4.1% decrease. It's not 5%, because it excludes the homelessness grant, which is ring-fenced and protected. In terms of how we're using that transitional funding, we're looking to apply that, first of all, to finance historic capital expenditure at the Meadows, which we had previously financed through internal borrowing of, I believe, £5.8 million. But we're now essentially able to pay that internal borrowing back in one lump, rather than having to pay it back through minimum revenue provision, which would add an additional pressure to the general fund revenue budget of around £150,000 a year for the next 40 years or so. So we're essentially using the money that we have now to avoid that future pressure. Similarly, there's around about 5 million additional borrowing which was in the general fund capital plan in last year's BSR, where we were projecting to fund that through borrowing. These are approved schemes that we've now switched to revenue funding. So that's how we're looking to apply that transitional funding, essentially to get the council back on the very sustainable footing that it was. And I mean, this council is unusual, I would say, in that historically it hasn't had to borrow for capital expenditure in the general fund, and we have always had this policy of financing up front. I think a few years ago, when we were looking at a large budget gap and lots of funding uncertainty, we started to be a bit more cautious around that, and we started to not want to commit those reserves and to hold them back and to finance more through borrowing. But now that we've got this bit more certainty around the multi-year settlement, we can see where things are going, and we've got the transitional funding. My view is the time is right to go back to the more prudent approach of financing the capital spend up front wherever possible, and only resorting to borrowing where we have a specific business case, with a revenue stream that will finance that. In regards to the questions on the specific bids, the playgrounds and the weed clearance, I'm going to have to take those back to colleagues, I'm afraid, in terms of operational detail, unless any of the cabinet members present wish to speak on them.
Thank you, Jodie. So we had one question about the weeds, which I think was where is the money going to be used, and one question about playgrounds, which was why now for that particular investment. I think weeds belong to Councillor Smart, and I think playgrounds might belong to Councillor Todd Jones, but I'm sure Councillor Smart will correct me. Are you happy to comment now, Councillor Smart, or would you rather come back in writing?
I missed the question on playgrounds exactly, Chair.
Just why has the bid arisen now? Surely we are repairing playgrounds and have done for a while. So what's the thinking behind a new bid, new costs now?
I think it'd be best to come back with a more detailed answer on that. I mean, just in terms of the weeds question, as portfolio holder, I definitely wouldn't want to say no to extra funding. It's always a good thing. And I suspect that the bulk of that money will go into staffing costs. I've just been discussing some of the detail of that today. But to give you a straight answer, the whole of that amount of money has not been decided yet exactly where all of it's going to go. But my former answer is the straightforward answer is staffing costs. But there are other things that money could usefully go on, like encouraging people to do the right thing, advertising, that kind of thing, social media. But those things are probably secondary to the main job of physically removing the weeds. But we've got most of the kit, I think, that we need. Probably don't need to buy any more of that, but it's just the operational side of things with staff. And we've got the staff team, we've got our full-time staff, all of that. But and we've got the staff team that's going to go around. But there are all sorts of ins and outs to it, really, from big to small costs. For example, just to hit you with one, we could consider buying an electric lorry instead of a diesel one. Diesel lorries make noise, so we can't use them very early in the morning. Our staff start on shift at 5 o'clock in the morning. So there's a limit to how much we can do at that time of day, or even later in the day as well, in fact. If we had an electric lorry, which costs about £500,000, Simon, that would mean that we could start much earlier in the day. There's lots of challenges to this removal of weeds. It really is a big subject, and I don't think tonight is the time to get into that detail.
Thank you, Councillor Smart. Thank you for answering that so far. I don't see any more questions from any members, so I'll just sum up to where I think we are. In terms of recommending things to Cabinet, obviously we have Councillor Smith here, who I'm sure is listening attentively. I think we wanted to feed back concern, just to be sure we're robust with the folk festival, that perhaps a one-off cost for the marketing and the future assumptions are rigorous, and that obviously a review is programmed in, though noting that is coming forward via Councillor Young, Councillor Gardner-Smith's committee. And obviously if Cabinet were willing to provide any more information about that prior to considering the papers, that would be fantastic. We mentioned already, I think, the consultation, that we noted the age category perhaps was less representative than we'd hoped. Again, I don't think there's anything that Cabinet can do about that now, but I suppose it's to note for next year when we take that back to our committee and when obviously the ruling group are preparing their consultation plans. I hope they take that into account. And potentially, obviously, we've got the issue around playgrounds and weeds, whether the Cabinet members wish to bring any more information to Cabinet that would just help clarify what those bids are for. Sadly, I don't think either of them are enough to spend £500,000 on an electric lorry. They're slightly smaller bids than that. But scrutiny members happy with that? Have I missed anything? No, that's great. Okay, we are now going to move on. Beg your pardon, Councillor Clough, sorry.
I think I was questioning whether the 300,000 on crematoria was sufficient funding for the future, or whether it was a developing issue there. Thank you.
Yes, I beg your pardon, Councillor Clough. So I think Jodie was going to provide an update on that. Is that happy? Are you happy to receive that? If that could be copied to members, that would be very helpful. And again, if any clarification is available for Cabinet, I'm sure Councillor Smith would be able to shed some further light on that if it's an area of scrutiny if identified where we perhaps don't have quite enough information at the moment. I will add that to the list. We are now going to move briefly, I hope, to the medium-term financial strategy and treasury management. Well, we're going to then take ward councillor questions at the end. We should be okay for time. I'm just checking. Yeah, we still have 25 minutes to go before we hit our first guillotine. So if that's okay, I'm hoping the MTFF will be a relatively brief one, but obviously it is important we have a look at it for scrutiny. So, Jodie, can I pass to you for that?
Thank you, Chair. This will be very brief, and then obviously happy to take any questions. So just a quick glance over the other financial strategies that are included alongside this budget setting report as part of the package. So the medium-term financial strategy is set out at section 9 of the BSR, and that demonstrates that the General Fund and HRA are sustainable over the medium term. And we also set out within the report some sensitivity to some of the key assumptions, and at section 8 of the report, some of the key financial risks, which I will summarise on the next slide. But I think it's very important, obviously, that members are cognisant of those. At Appendix O, you will see our capital strategy, which we issue on an annual basis. And this sets out our sort of strategic and in-principle approach to our capital expenditure and financing and asset management. And then at Appendix P, there is a treasury management strategy, which includes our capital and borrowing projections and prudential indicators for the next 5 years. I will draw the committee's attention to one of the recommendations which will go to Cabinet in relation to treasury management strategy, which is to increase the authorised borrowing limits of the council, and that is in respect of the HRA 10-year capital programme, essentially to accommodate the capital programme, the £470 million of additional borrowing, which I mentioned in the HRA section, would take us over the council's current authorised borrowing limit if it were not increased. So that will be an explicit recommendation to Cabinet. In terms of the key financial risks, and we have already spoken a lot about these, so I'll keep these brief, but I think it's helpful just to summarise in one place. Clearly, LGR creates huge uncertainty and transitional costs. There is always risk around high inflation, interest rates, economic stress, and reality will vary from the assumptions that we've made in setting the medium-term financial strategy. We use the best sources of data we can find. We use Bank of England projections for inflation. We engage treasury management consultants who forecast interest rates for us. But clearly, any estimate, any assumption can only ever be an estimate. And clearly, if things vary, it could go up or down. The cost of waste reform. So we do have significant budget bids that you will have seen, mainly in respect of the implementation of food waste collections. Those collections, I believe, are beginning to be rolled out this month, or if not very soon. But clearly, as that service gets up and running, as it's a new service, there is additional inherent risk around the cost of that and whether it will actually be delivered within that budget envelope. Future government rent policy is a huge risk. We've talked lots about convergence. With the larger estate that the council has, there is always a significant risk of unforeseen spend on buildings, on properties, if something were to occur, if there was to be an uninsured incident or a building safety issue that needed dealing with quickly. And whilst the savings target has significantly reduced to £1.5 million, there is still an unidentified savings gap of £1.5 million over the next 5 years. So there will always remain a risk that the council doesn't deliver those savings. The final thing I'll draw your attention to is the Section 25 report, which I have to include at the end of the budget setting report. So this is a statutory report from me as Section 151 officer, which needs to accompany the budget setting report when it goes to full council for decision. I would advise you to read the full report if you haven't already, but the conclusion is on the screen. I consider the estimates for the financial year 26-27 to be sufficiently robust and the financial reserves up to the 31st of March 2027 to be adequate, drawing your attention to the 3 points on the screen. So significant uncertainty in relation to local government reorganisation, significant inherent risk posed by the scale of the new homes development programme and the associated borrowing, and the fact that the council does not currently have detailed plans to meet the remaining £1.5 million recurring 5-year savings requirement. Thank you.
Thank you very much, Jodie. Obviously, that's fairly self-explanatory on the screen, so do members have any questions or concerns? Councillor Young, I can see you've got your hand up. Nobody else from Critty House, so please go ahead.
Thank you, Chair. On page 93, there's the various scenarios used for stress testing the medium-term financial statement. Can you just explain why we've used a scenario that government freezes funding in either 29-30 or 31-32? I mean, obviously that's the main source of funding for us, but surely interest rates are going to be slightly more pertinent to our financial situation.
Thank you. I think for the general fund, actually not on the basis of this budget, because the only borrowing that we have is Park Street, and that's at fixed rate. So where we will need to consider interest rate risk is when we come to look at Civic Quarter in the autumn. And when that report comes to full council, that will definitely need to include sensitivity analysis around interest rates. But as we currently sit in the general fund, interest rate fluctuation is not a huge risk at present.
Okay, so what was the basis of the selecting the government funding then, freezing?
I think really that it's kind of one of the most significant inputs into the general fund in terms of our core spending power, and it's been an area of significant uncertainty in recent years. So recognising that we now do have the multi-year settlement, it's thinking now in 3 years down the line what potentially happens after that and what impact that might have on the general fund.
Thank you very much. I see no further questions. Okay, so there's not a lot to sum up there, because I think, Councillor Young, there wasn't a particular recommendation to Council there, but Scrutiny have noted the risks and obviously we'll expect them to be considered and reviewed on an ongoing basis. So we have now reached the end of that part of the agenda and we are moving to ward councillor questions. We've had 2 ward councillors request to speak, Councillor Robertson, who is also chair of our, or co-chair of our Housing Advisory Board, and Councillor Mark Ashton. Councillor Davey, thank you very much for coming. I should note Councillor Pound also left earlier as well. Thank you very much. I think Councillor Richardson was first, if that's okay, in terms of who emailed me first, and then we'll take Councillor Ashton. Please go ahead.
Thank you. Can I ask Jodie to take us through on page 120, the business rates movement year on year? I didn't quite follow how what he was telling us earlier fitted in with that. Secondly, there was a question about the operational hub costs and the bid of 50,000 from general fund and from HRA. And thirdly, I have a question about overall capital expenditure. So you've got that first one.
Thank you. So that was business rates.
Yes. There's 2 lines there, business rates baseline and accumulated business rates growth.
Okay, Jodie, are you happy to take that?
Can you explain what those are?
Thank you. So the business rates baseline forms part of our local government funding settlement, and that is essentially the element of business rates that government expects us to retain as part of our finance settlement. So this is where the finance settlement does get very complex, because there are essentially two elements. After having worked out our relative needs and deducted the amount that we can reasonably raise through council tax, what you're left with essentially is a settlement funding assessment, which is how much money you should take away from the settlement. But the government then splits that so that part of that is funded through business rates and part of that is funded through government grant. And it's split in proportion nationally to how much, depending on how much business rates the government expects to raise nationally. So essentially the business rates baseline is our share, according to our relative need formula, of the national business rates take. So what happens is we collect business rates locally. We collect a lot more than that. I think the gross is over £120 million. We initially keep 40% of it. However, then the difference between what we initially keep and the business rates baseline of £7.1 million next year has to be paid back to government in a tariff. And that is essentially then redistributed to other councils. So that's the baseline position, and you will see that broadly increase in line with inflation over the 10 years, which is the expectation. The accumulated business rate growth is then the portion of additional business rates income generated through growth in the city that we are permitted to keep. So in the past, we have been permitted to keep hold of 50% of our 40% share of any additional business rates income generated through growth. So essentially, from the point the baseline was last reset in 2013, any growth in the city we kept 20% of. Going forwards, it's going to be slightly more complicated because government thought, why have one levy rate if you can have three? So there is a more complicated calculation behind it. But in essence, what's happening is you will see 25-26, we have quite a large figure, 8.8 million, which reflects the fact that we've been building up growth for the last 13 years. That is then reset at the 1st of April 26. So that resets essentially back to zero on the 1st of April. We will expect to deliver a small amount of growth in 26-27. That will gradually increase over the next 3 years until we expect another reset in 3 years' time in 29-30. And we've built in going forwards these cyclical 3-year resets, which is what government have said is going to happen. But bearing in mind, they told us initially there will be regular resets, and the first one took 13 years. So there remains significant uncertainty, I think it's fair to say.
Could you pop your microphone on, Councillor?
Sorry, I thought you said during the earlier part of the meeting that we were restrained from assuming business rates growth.
So the way that we deal with this, we still predict the growth, but then we take that out again in the bottom line contributions to reserves. So we're not using it to balance the budget, it's an in and out. And you will see from the first 5 years, you can't see it necessarily that obviously because there are other reserve movements in there as well. But if you look from year 6 onwards, 20, 30, 31, you'll see that the contribution to reserves figure exactly cancels out the accumulated business rates growth. So rather than using that to balance the budget, we are essentially taking it through directly to reserves in the table on in the reserve section of the report, section 8, where the general fund reserve prediction is. So page 88, sorry, you will see that dropping in at the bottom line there, indicative future business rates growth.
So is this similar to the methodology we were using before in previous years?
It's identical to what we were doing up until about 3 or 4 years ago when we switched to using 1.5 million per year, which was safe at the time because we were getting in excess of 6 or 7 million. Because we've reset to zero, the prudent thing to do now is to not assume anything for the time being, and we'll come back and revisit that again probably in a year's time.
Okay. My second question was the operational hub. There is 50,000 bid for revenue on HRA and 50,000 on the general fund. What about the operational hub's existing budget? How much is that? Presumably this is additional to it, 100,000 on top of what was being paid for the old hub.
Are you happy to answer that, Julie? Or do you need someone from...
Need to take that away. I can come back to you on that.
But in principle, that would be the case.
Yeah, there is an existing budget, yes. The bid is an additional amount. on
Well,
top
in
of
that
the
case, we
existing
need
budget.
to know what this 100,000 is going to be spent on.
It is essentially on increased running costs, increased utility costs, I believe, and increased business rates. Now, to my knowledge, we haven't yet had the business rates valuation yet, so there is a lot of uncertainty there. Obviously, we won't know what the business rates, like any other commercial property, we won't know what the business rates are until we have the VOA come in to do the valuation, and that can take some time, years sometimes.
Okay. And finally, does the scale of capital being envisaged to be spent on the civic quarter mean that will there still be scope for an annual programme of a few million a year of capital expenditure elsewhere in the city?
You have to take that one, Jodie. Thank you.
Yeah, I'm just trying to find the relevant appendix because it is set out in the appendix. So yes, there is an existing capital plan, which is summarised at Appendix FC, General Fund Capital Plan. So that is over the 6 years, including the current financial year. The total General Fund Capital Plan is £127 million. And there are new bids included, capital bids included in this budget, setting report at Appendix FA, and the new bids total just over £10 million.
This is other than the civic quarter.
Thank you very much. And Councillor Ashton, very patiently waiting. Thank you so much. Go ahead.
Thank you, Chair, for letting me speak. My questions relate to capital bids on page 133, CAP 5337, car park entry and exit systems. At a time when we're always looking at savings, allocating £2 million to a project that does not provide details. The wording is, this will bring down our maintenance, ticket and staff time considerably. This needs careful investigation and not nodded through on a consultant say-so. Exactly what do we get for £2 million? When do considerable savings commence? And what is the timeline to recap this £2 million? If this £2 million was invested, it could earn between 4 and 5.5% long term. So we receive £80,000 to £110,000 per annum. And I would say this is a considerable saving, and our £2 million will still be intact. So hopefully you can see my reasoning why I believe this proposal needs careful scrutiny and not just nodded through.
Thank you, Councillor Ashton. I'm not sure if that's a Councillor Smith question or a Jodie question. So, I don't know. Who's responsible for car parks? Oh, apologies, Councillor Smart. Do you wish to respond to that?
But it's quite a detailed question, Chair. I can give a general answer, and I appreciate if Councillor Ashton wants more text, that would be possibly appropriate, but I don't have that here today. But just in general terms, the entry and exit systems are what we have at the moment, but they need replacing. They're not fit for purpose anymore. They need renewing. And in terms of payback, I don't think it's quite the way to look at it. I mean, we need to have entry and exit systems or else the car parks wouldn't work. I have had a discussion with senior officers on this some time ago because I questioned the expenditure in a slightly different way to the way you're doing it, Councillor, but still I questioned it. I mean, my main approach was that, did we need to do it? Could we wait for another authority to spend this money like the Unitary Authority? But I was told that they really wouldn't necessarily last that long. And if they failed during operation between now and then, the end of this authority, well, firstly, it would incur daily costs when the car parks weren't working, but it could also put us at risk of much greater costs if we lost card payers' data. And the figure I was given for a maximum potential risk capacity was we could lose 10 million in terms of the costs we might incur for losing people's data. However, that's probably an extreme case. I think the general thing to keep in mind is if the car park systems aren't working, our car parks can't work and we can't take any income from them. So we really do need a fit-for-purpose car park system to charge people as they go in and out of the car parks.
Thank you, Councillor Smart. Councillor Ashton, did you wish to come back?
I'm not arguing the fact that we need systems that work, but this proposal says it makes considerable savings. My question is, what are these considerable savings?
I think, I think it, again, as I referenced earlier, if Councillor Smart has kindly offered a little bit more detail prior to it coming to Cabinet would be welcome, particularly, as you say, obviously, if we can't get car park income, that has a substantial impact on our budget, you know, because we do rely on that quite heavily. So I think, Councillor Smart, are you happy to take that point away and perhaps provide a little more information before it does come back to Cabinet?
Yeah, thanks to Councillor Ashton for the question, and yes, I will, Chair.
Thank you so much. So I'll make that our final recommendation to Cabinet from Scrutiny Committee, if I don't see any disagreement from members of the Scrutiny Committee. Okay. We do have technically any other business. Does anyone have any other business from the committee? Councillor Clough?
This was just about the forward plan and having the civic quarter.
That's the next item. Hold that thought for one moment. So we don't have any further business. I think I've summed up all our recommendations to Cabinet, both to Councillor Bird, Councillor Smith and obviously Councillor Smart, who is here as well tonight. And the final item on the agenda, I guess Councillor Clough might want to say something about, is the work programme and the forward plan. We already have on there the heat network and I think civic quarter coming forward as and when that budget decision is made. But if anyone else has anything else, and Councillor Clough, please do go ahead.
Yes, so as I mentioned, I've been put onto this committee, which is to do with the civic quarter, developing some of the ideas, and we're all sort of, it's all pink papered or secrets. But there was a reference at that committee that there was an expectation that it would come, the work of the committee would come forward to review, to scrutiny. So I'm really saying is review of the civic quarter on the next scrutiny project to pick up anything that's coming out of that process. Thank you.
Absolutely. I think it is already indicative on there for next year because obviously we're not totally sure of the dates when it will come forward, but yeah, I may not be chairing it by then, but if I still am, and I'm sure if I'm not, that's probably, it's such a substantial item that it would be extremely likely to come, and I'm very happy for Dan to add that to our forward plan, pending when we have a confirmation of the date. I think that is everything. Does anyone else have anything to raise? No, and we've come in 3 minutes under time before needing to extend the guillotine. So thank you very much to members. I'm just going to say good night to anyone in the public watching. Thank so much to Jodie for your amazing work on the budget, because particularly doing both together. You're going to get a round of applause. We'll leave that on the public record as well. I think it's very important. And thank you to Dan and Sarah. And Sarah, would you be kind enough to finish the live stream for me?
At the moment, I can't end it because I can't access the system, so I'm going to have to work out how to do it, so we may still be temporarily live.
Okay, so we may still be live, so we'll say goodbye
just to be aware of that.
Thank you. So please be careful when you leave that we may still be live streaming when we shut this meeting down. Thank you very much, everyone. Have a good evening.